If you're watching this video at nighttime, I want you to put it away. Take it out of your cassette player and watch it tomorrow morning. You see, we got everybody up early to have an early bird session. The stock market opens at 9:30 Eastern time. Well, we were taping this on the Pacific time. And so we had to get up at 6:30 and get everybody to come into the seminar to see what I do every morning. You see, a lot of things happen the night before, announcements from companies. They're acted upon the next morning. So we got to get together. If you want to make money, sometimes, especially in options where there's quick movements, you got to get up early. I'm convinced that if you want to get really rich in the stock market, you have to get up whatever time the stock market opens in your time zone and make something happen right away. Again, good morning. We're going to start now the early bird session. It's a few minutes into the market open. There are a couple things that I want to cover that were not correct that we did yesterday. As a matter of fact, if one of my staff, Sherry, if you could find in my brown bag the Dick Davis Digest, I want to read an article in there. Yesterday at the end of the day, we were doing that Discovery Zone thing, and it got really exciting. You know, $9, have the option at 10. Remember I kept saying in class about the, is there a 1 in front of that? You know, because it was like whatever. Everyone, there's not a 1 in front of that. It was like a 1/4 ask on that, so the bid was really low. So if you were to do the option, or buy the stock, and then sell the option, you wouldn't get $1, you'd get 1/4, right? Does that substantially change everything? So that wasn't as good a deal as we thought. So I wanted to clear that up here at the very beginning, make sure that that's on camera so the people at home don't think that we're here making all kinds of sinful money, you know, on a deal like that. But we're going to find some. All right, we may have another hot one on, you know, that Marcus found. Okay, and we got the stockbroker on the phone. So whatever that symbol means, I don't know. All right. So anyway, we're going to get him on the phone, and we're going to go shopping here today. Now, if you'll pull out your stock report, I'm sorry, what was it? The stock split report that we had yesterday? The stock split, that's what I want to look at here, because there was a couple more. Do you remember we had that Texas Instruments? And somebody else mentioned this Kulik and Sofa and Scientific Technologies and all that. So we got several companies doing stock splits. Anybody ever heard of Price Communication? Okay, well, that was quite old. That was back in April anyway, so we don't want to check out that one. But this Office Max one.
I'd like to check on Xylem.
Xylem. Where was that one?
Right underneath it.
Oh, third one down. All right, and that's a 3-for-1 stock split. All right, so let's check out that. Now, when's it going to be? It's going to be, okay. All right, well, as soon as we're ready to go.
We're ready.
Okay, Randy, are you there?
Yes, I am.
Hi, how you doing?
Good morning.
Good morning. Listen, we've got a company. We're going to, you know, do you know of anything that we should check on right now? Stock splits, news, mergers, anything?
I don't right at the moment, Wade.
All right, let's keep looking. If you got your news reports going there while we're doing this session, because we want to scout around, but while we're checking some stuff here in class, if you could check on some other things there. Okay, we've got a company called, it's on one of our standard reports, it's doing a stock split in July. Okay, and it's called Xilinx. The ticker symbol is XLNX, like X-ray, Larry, Nancy, X-ray.
Okay. I have a quote of 92 3/8 at 92 3/4.
92 3/8.
I just clicked the 92.5 on the bid at 92 3/4.
Okay. Now, do you have any information on their stock? It's a 3-for-1 stock split, and it's going to happen in the first couple weeks of August. The owner of record date is July 28th. Is this a big company? It's a big. Somebody in the audience is saying yes. What do they do?
Hardware development, R&D. It's for virtually all computer R&D. Use Xilinx and you're going.
Really? Okay, so you're saying that computer companies use the hardware of Xilinx to get going?
Yes.
To get going into what, research? Or just to get...
Into the product side development.
Really? Okay, yeah. Do we have an annual, Randy, a 52-week high and low?
Yes, just 1 second. Let me give you some more information here.
First of all, I guess what I want to know is, does it have options?
Okay, before I tell you, well, okay, let me kick out of this and go back to the options just a second.
So he's switching computer screens. So again, this is real life, real time. I'm driving in my car. I'm ready to try to get to play basketball, and I've got to wait for these guys to scroll through their computer screens to find something for me. Okay? So what else do you know about this company?
Yes, there is options on this one.
Okay, so what would be, do they have leaps?
Okay, so one more sec.
What's that? News on this company? Do we have a chart on this one, Will? Let's get one.
I'm still rolling through the screens. I'm into September. There's lots of options.
Yeah, you remember those screens that we like Gillette and all that? Those are like, 15 or 20 lines per screen. So they just got to keep scrolling back and scrolling back and scrolling back on their computer. And, here we are in, summer, and they got to go clear back. Like, to check out a leaf, they got to go out to January. To see if there's anything in January.
I definitely go to December. It does not seem to go any farther.
Okay.
Okay, let me give you something about the company. The number of shares outstanding, 23.28 million. The float, 20.9 million. This company develops and supplies field programmable gate arrays, FPGAs, and related development system software. FPGAs are standard integrated circuits programmed by system designers to meet specific logic requirements of most electronic systems. For the 9 months ending 12/94, revenues rose 36% to 245.9 million. Net income rose 35% to 39.4 million. Results reflect increased sales of XC3100 and XC4000 hardware families and a continued commitment to control administrative costs.
Enough already.
Okay.
I'm not into all this computer stuff. They're profitable, right? Okay, did you get out to the Januaries and see?
They wouldn't go past December.
So they have Decembers. So what are the December, the December 90s and the December 95s?
The 90s are 14 and a quarter at 14 and 3/4. The 95s are 12 at 12 and a half. The 100s are 9 and 5/8 at 10. You want the 105s?
Yeah, might as well.
105s are 8 and a quarter at 8 and 3/4.
All right, we need to discuss this one. What do y'all think? We'll spend more time on this one a little bit later, but what do y'all think? Just by looking at it right now at the very beginning, does it look like anything's here? Is this a pretty high premium for this? But now the point is, though, that in about the next 5 weeks, this company is going to do, let's say it's at $93. This company is going to do a 3-for-1 stock split. So if it is, and that may not be, it may be at 100 by that time, maybe at 85, we don't know. But if it is at 93, in about 5 weeks, it's going to go down to 3 shares at $31 each. Right? That's the game. How do you take advantage of this now? And by the way, at that point in time, if you did this one at 14 and a quarter, let's say $15, just to round up for this one, okay? You'd be at $5 would be your cost in each one of these. And you'd be gambling what? You'd be gambling that by December, that this stock you're going to be able to buy it at $30 a share. Right? So it's already in the money by $1. Right? So $5, $1 of the 5 is paid for intrinsic value. The other 4, is that way above our 50%, by the way? So the time value to this premium is way above 50%, so that kind of violates that rule we talked about yesterday. But what was the one exception that I always go for? Stock splits. Right? Stock splits. The computer doesn't calculate stock splits. Right? We don't know if this is an exciting company. A lot of people are buying it or not. Right? What do you think, Randy? Is there a lot of stuff going on in the options market right now with this company? Because I've never heard of it.
They just barely started, and there's not a whole lot of activity. I see 30 trading on the 85s, 5 trading on the 95s, nothing on the 100s. It's very small right at the moment.
I don't know, guys. I like this one. You know why I like it? Yeah, it's not discovered yet, and it's $40 million. And by the way, by having more shares out there now, will that increase the float? So there'll be more investors like us getting involved, right? And usually about this time, the company kind of goes on a PR kick too. They start putting advertisements, or not advertisements so much as tout sheets, things like that in the magazines and all that to start bolstering the value of the stock. What is the job of a president of a company? The board of directors, not the board of directors so much, but the officers of a company. One job is to increase the profits of the company, and the other job is to increase shareholder value. can a president ignore one of those, and usually at the expense of the other? So if he's trying to really build up the value of the company, it's for who? All right, I'm going to tell you flat out, everyone, and I don't care what anybody says. The purpose of being in business is to make the owners rich. What do you think? And I don't care whether that's a dry cleaning business or a pet store. The purpose of being in business for yourself is to make a lot of money. All right? Okay, hey, let's consider. I'm going to keep this one here because this could be a really hot play. All right, Randy, GDC. Okay, GDC. Okay, we've got a guy here in the class that's doing a bunch of study on this one, you know, checking some premiums. So would you check this one? This is that general data. Okay, now, as we talk options like this one right here, the Xilinx, you should be in your manual, so you should put that example in on page 18, your different examples. So we'll do all the options. We'll keep flipping back to page 18 for all of our options. All right, so you write down the numbers, and we'll keep tracking it. We'll keep looking at different option plays. Okay, because I want to see what's going on with Gillette today. I want to see what's going on with, what was that other one? Oh, Texas Instruments. Okay, Randy, you got GDC?
Yeah, 12 3/4, 12 7/8. The 1250 calls are $1 at 1 1/4.
I'm sorry, the what? The 1250s?
The 1250s are $1 at 1 1/4.
Okay. Anything on 15s yet? I doubt
The
it.
15s, yes. 5/16 and a half.
That's not bad. That's up from yesterday? Is the stock up too from yesterday? Or just the options?
The stock is up a quarter.
Up a quarter. Whoa. What do you think, everyone? Okay, now let me repeat what I was saying yesterday, and let's kind of review a lot of these things. We're going to go do, you know, this morning, we're going to go through the formula, if you will, one more time on this one. Now, remember I was saying yesterday that if the call premium right here that you can get represents, well, I said this, if the call premium is 10% of the stock price, then your rate of return is going to be 20% because you're doing it on margin. In this example here, if you got like a $1 3/16 or whatever, you know, right around $1.18, $1.19, that is not quite 10% of this, is it? What is it, about 8% or 9%? So what is the rate of return going to be? 16, except for this. Is this, if you were to write the 1250, is that in the money or out of the money? It's in the money. So if the stock continues to go to 13, 14, 15, will you get called out? Yes, and if you get called out, then you have to give back a little bit of your profits, right? Because if you bought the stock at, say, 12 3/4, even if you could buy it at 12 3/4, right now the price is 12 7/8, you'd have to give back 25 cents of your profits, okay? I'm not really excited about it yet. Okay, let's check some more. Randy, how about this one? I never heard of this company. It's called PT5 Communications. The ticker symbol is PITC. You ever heard of this one?
I personally have not, but the quote is 4 7/8 at 5.
Okay, hang on. Okay, PITC. Okay, this one we have a chart on, Randy. It looks pretty interesting. Okay, PITC. It's 4 7/8 right now by 5?
That is correct.
Okay, and what are the July 5s going for?
3/16 at 5/16.
Not great, but not bad. Okay? All right. What else did we have? Do we have any more? The team should have gotten together. What's that? Well, we'll do. I'm going to do a couple more covered calls. See if there's any more covered calls that you want to look at. Okay, you guys should have got together with your teams last night and find those, because all the teams found 1 or 2. You're supposed to find 3. Right? That's your assignment. You're not leaving the room here today until you find 3 good ones. Right? So you need to call your stockbrokers to get going on this. Okay, any more? Because I'm going to flip through this real fast.
There's another company on here I'm familiar with that's doing a 2-for-1 split.
Which is-
Kalicki and Safa.
Which is what?
Kalicki and Safa.
Okay.
KLI.
All right, well, let's move over. I want to, before we do that, let's just everyone run the numbers on this one real fast. Let's say that we can buy this stock. Go ahead and hand it to me, Will. Let's say that we can buy this stock at the one that we had up here on the screen, this whatever. If we could buy this stock at, say 4 7/8, let's do that. I want you all to run the numbers on this just so we're back in gear again. Get your brains going, get your calculators out, get everything going. 4 7/8, and then let's sell the call for 25 cents. 25 cents, and let's see if that is good. All right, see if that's a good deal. All right, so run the numbers. I'm going to have you guys do this one, and by the way, this would be a good one to put on your covered call pages, your example is probably page 24. If you haven't filled in all your examples, put in as number 5 or something like that on page 24, right? Or number, where are you? You got a number 3? Wherever you are. All right. So this is this Pitt and Creef, whatever it is. I never heard of this company before. Where did it go? Pitt and Creef, Pittencreeff Communications. Okay. Now, the first thing I'd do if I were this company is I'd change the name. I think the word pit has a double connotation, it's like the pits or something. All right, got it? Just going to wait for you guys to get this. I'm not doing this one for you. You guys got to do this one on your own. You got to get these numbers down. So what are you doing? You ultimately come out to where if you're called out and if not called out. I want to get a rate of return on this one. 4 7/8 we're buying the stock, and then we're going to sell the call for 25 cents. By the way, if you look at the chart on this one, for the last, can you bring the chart up on this one? You got to see this one, everyone, because I like this one because it spent most of its time above $5. All right, look at this chart. This right here is $5 right here. And so this one's been above 5 most of the time, and even when it clear back in January and February, when it dipped down to $3, $3.50, it came right back up, and it's been right there. So it looks like it has most of the level above 5, right? And which tells us what? Is that some volatility? Now remember I was talking about the $8 to $12 swings? Well, tell me if you got $8 to $12 down in the $4 and $5 range, what the swing would be on a percentage basis. $4 to $6, right? It'd be about the same as 8 to 12, would it not? 4 to 6. So the percentage basis would be pretty cool, and this has got it. This has got the volatility that we're looking for, right? Pitt and Creef Communications, PITC. It's up here on the screen. All right? What do you got? What is your rate of return if you do not get called out? 10.4? Okay, and what is your rate of return if you do get called out? How much? 15.7. Not great, but not bad. All right? This is, by the way, this is the kind of stuff I was doing with baseball. I like these little one of the reasons I like them is because it doesn't take a lot of money to get going. Now, obviously, we need to do some more homework on this company. We need to find out about it, how big it is, what it's got going. Okay, Randy?
Yes.
We're going to move over to now and do a couple more option plays on some stock splits that we have here. Okay, Mark, did you have one? Gillette? Yeah, can we check on Gillette? That's the one we talked about yesterday, was a September 45? All right. Yeah, everyone, let's go to the Gillette page. Randy, we have a percent to double sheet here.
Okay.
That yesterday, the stock on this sheet here, this is yesterday's information, was at $43.87. And the bid and the ask for September 45 call was $1 1/16 bid by $1.25. Right? And the percent to double was 8% by this computer model that we have.
Okay, is that symbol G?
Yeah, G.
Okay, it's 44 1/8 at 44 1/4 at the moment.
Okay, it's already gone up some more.
By
the way, do you remember, okay, remember in our example yesterday, when did this one split?
Right.
When was it reflected? Yesterday, Monday, right? So this one was around $80 when I started buying the options. It went up to 84, split down to 42 yesterday. So now yesterday you had 2 shares of stock at 42 or so, and it was already up to 43. Now it's up to 44 1/4 within 2 days. I'm telling you guys, I love stock splits. And you just literally just get right in on stock splits, either right now or right when they split or whatever. So the September 45. Are we already getting close to $45 now? It's not bad already, right? Okay, what are they going for right now, Randy?
The September 45s are 1 3/16 at 1 3/8.
Now, I want to show you something, because this is today's news. Okay, this is Tuesday's news. Okay, on Monday, the stock was at 43 7/8. It's already up to 44 1/8, and the bid in the ask was what? $1.06, 1 1/16 by 1 1/4. Now, I'm trying to prove here in class a point. When there's a slight movement in the stock, a small movement in the stock, there's a magnified movement in the options. What has happened here, everyone? Have the options gone up? Okay. Not a whole lot, but they've gone up some, right? Because you see they've gone up, they've gone up 2/8 or 2/16 right here, which is 1/8. So they've gone up 12 cents here on the bid, right? So look at this. There's, I mean, by the way, 12 cents, what percentage of is 12 cents of a dollar? You know, it's around 10%, right? So there's what percentage of the movement in the stock? From 43 and 7/8 to 44 and an eighth, right? See the point? There's a small movement in the stock which represents a 10% movement in the option, right? So like a 1 or 2% movement in the stock, or 3 or 4, represents a 10. Do you see the point, everyone? I don't know if I need to belabor that point, but I keep saying that over and over again. Small movements in stocks, up or down, reflect a magnified movement in the option. And there's proof of it right there on the screen. So is this still a good play? What do you think, everyone? So if you wanted to get involved right now, what would 10 contracts cost you? We're right up here somewhere. What do you think? What can you get them for? Well, what are you going to get them at? See, if you have to go and buy at the bid, you know, it'd be $1,375. Could you try to get them at $1.25? So like, there's any pullback intraday like today, if the stock just pulls back even 50 cents, could it go down to $1.25? So I'd probably try to buy some at $1.25. Right? Now, if you had to pay the $1.37, right, then 10 contracts would cost $1,375. Now, what we're saying, and by the way, I don't know if that 8% holds firm today. Right? It's another day. It's another percentages. But yesterday, it took an 8% move in the stock here by this, again, this computer model that somebody has come up with, and we don't know how good it is, but historically they've been fairly accurate. Somebody, this stock would go up 8%. What would 8% of 43 bucks be? About $5. So if the stock goes up $5 in the next, right, end of June, July, August, and then the third week of September, if the stock goes up $5, then you would double your money in the option. Right? You like it? No. Where are you guys? Too early in the morning? See, you got to get your thinking caps on, because this, by the way, can this play change all through the day today? So, by the way, would you rather have gotten this one yesterday? Yeah, you could have got this one yesterday and saved a few pennies.
Even on the percentage double, we've got a percentage double 5 and 6 back in July and August for the $45 calls.
Okay, that's a good point. So let's go back to July. July, the $45 call, you know, this is yesterday's prices again. The percent to double is 5%. But what do you got to take into consideration here? You know, you're not just a student in this class, you're a student of options, and we all are, right? Remember Albert Einstein, when he was asked at the final banquet of his life, you know, he said, I'm engaged in the study of physics. You know, we are not a professional investor. We are always learning, right? We're always in that learning mode. Okay, help me out here. Help me out. So what we're saying is that on Gillette, that you've got July, it's only 5% to double, right? So you could, the stock yesterday was at 43 and 7/8, and the options in July were at 38 cents bid, 50 cents ask. So you could buy it for right around 50 cents, you know, not $1.25, right? And your percent to double on this is only 5% to double. Does that look like a good deal? It looks like a good deal until you start thinking about it. What's the problem? How long you have, everyone? So what's 5% of $43? $2. So now the gamble is that this stock has got to go up $2.25 or so between what? In the next 3 weeks. Might that not happen? And what if it doesn't happen? What happens to your money, everyone? You lose. So you're just looking at 50 cents, and if you bought 10 contracts, that's $50 times 10 would be $500. Could you easily lose your $500 in that deal? By the way, could you make some money too? Quick deal, in and out. I've done a bunch of these, and I made some good money on them. But boy, when it gets down under a month, does it get a little bit scary? So you understand now why there's value to several months out? The time value to the premium, several months out. Okay? Mark, any more on that one?
Well, that December 45 was at least last week,
Yeah. Yeah. The December? Yeah. Okay, what was the other one that you want to talk about?
Lithium socket.
Okay, hey, Randy?
Yes.
Got one. Ticker symbol. KLIC. It's called Kaliki and Safa. Another cool name. Okay, Kaliki, KLIC.
Okay,
It's doing a 2-for-1 split at the end of July. It's doing a 2-for-1 split. Okay, ticker symbol is KLIC. Okay, what's the stock at right now?
60 and 5/8 at 60 and 7/8.
Has everybody noticed a trend here? In every stock split company that we've talked about, what has been the lowest price pre-split that we've talked about in this class? About 60. What have a lot of them been? Texas Instruments, $140, $90, whatever. So when a stock gets up in that $100 range, does it get just, you know, where people can't purchase it? just too high. People don't want to spend $100 on a share. People want to spend 20, 30 bucks on a share. So when this one splits, what's it going to, if it stayed the same today, what's it going to go down to? Okay, is it up or down today, Randy? Do we know?
It's up 5/8.
It's up 5/8 already?
Last trade at 60 3/4.
Okay. All right, let's find out what the options are. Do we have any long-term, is it optionable first of all at all?
Yes, it is. The July 60s, which I have up, are 3 3/4 at 4 1/8.
Okay, let's look at this. July 60s are 3? What? 3
3
3/4?
3/4 at 4 1/8.
Okay.
The August 60s are 5 3/4 at 6 1/4.
5 and 3. Okay.
The October 60s are 8 3/8 at 8 7/8. The January 60s are 11 at 11 3/4. That's as far as I go.
Okay, what do you think, everyone? Now, are we in the money, out of the money, or out the money? If the stock's right around 60, right, and now it's at 60 and 5/8 or whatever, 60 and 3/4, it's a little bit of in the money stuff here, right? A little bit. So the $3, 3 3/4 right here, the 3/4 of it, right, 75 cents of it is intrinsic value. The other $3 is pure gamble, pure risk, is it not? Hoping for what? So is this doing a 2 for 1 or a 3 for 1? 2 for 1. So the end of July, this is going to do a 2 for 1 split. Okay, I'm going to do this one. I like this one. You know, I just feel good about it. I like that name. This is my sophisticated research, right? Randy, do we know for the year what the high and low is on this one? Can we get a chart on it?
Okay, just 1 second.
What's that? Yeah, or any, is it profitable, do you know? Now again, remember what I said yesterday, and you can check me out on this one. I'm not asking you to trust me, I'm asking you to test me. Usually around the time that they do a stock split, the company has excess profits or something like that, and they announce a larger dividend. They increase the dividend payout, right? So when you research the news, you'll probably find that true probably 70, 80, 90% of the time. The reason they're splitting is because the stock has gone up, usually based on earnings and reports and news and all that, and they're getting ready to split down, but they usually have a bunch of cash at that time too. Okay? When you pay out a dividend, if the dividend is higher than what people expected, the stock goes up a lot. People want to buy it. People want to get involved. They want those dividends. If the dividend, by the way, Novell one time came out with a dividend, they were expected 23 cent dividends, right? The company's really profitable, but only made 22 cents for the quarter. The stock dropped $4 a share on a 1 cent dividend, you know. And by the way, it's still profitable, right? The company's still making millions of dollars, but it's 1 cent less than what all the analysts said it was going to be. So what do they do to the stock? They pound it. They change their ratings on it, right, for 1 cent difference and a $4 drop in the stock. You know, who can figure that kind of stuff out? You know, and then the next day, another company announces increased dividends and the stock goes down. And the next day, a company announces a huge loss and the stock goes up. I can't figure it out. I'm telling you, the stock market will lop off your head if you try to understand it from some of those newsy points of view. You just got to try to do your best, get the news, and take the best calculated risk, the calculated gamble that you can take. Okay, anything else on this one, Randy?
The stock is traded as high as 61 7/8 for the year, and as low as 11 1/4.
Whoa! Had a high of 61 1/8,
Yes.
and it's had a low of $11.
Yes.
Well,
There's only 8.28 million shares. Their float's only 5.8 million. The book value in this company is at $8.11.
okay, good or bad? If you broke up the whole company and sold
Yeah, the
it off.
net sales for the last 3 months rose 35% to 51.5 million.
Does it state if they're profitable or not?
Net income rose 61% to 3.7 million.
Now we haven't checked that.
Lower price.
It's good.
That's why we've done it 11.
All right. Yeah. It was probably just, I'll bet it was at 60 before that. I'll bet it just started as a low price stock and it's gone up to 60. Right? We'll try to get a chart on it as soon as we can. Can you get one? KLIC? All right.
When it's at the money, then all the premium is in time value, right?
That's right. Well, in this case here, just 75 cents of it is in intrinsic value. See that? On this one right here. Because the stock's at 60 3/4.
So you have to have other features going for this one to like it.
And the only other feature this one has going for it is it is profitable and it's doing a stock split. I just like stock splits. Okay? What's that? What is it? Okay, well, let's do one more stock. We got to check on Tootsie Roll here, Randy. What's this one? On which one? Tootsie Roll has no options? Can you check that out, Randy? TR?
Okay,
Is this not optionable? Man, that's a big company. Did you find that article for me?
Yes, there is no option.
My goodness. Okay, here's one, Randy. AGCH. By the way, is everybody getting into this? This is what I do every morning. I go shopping. It's just like walking with Randy through a supermarket. How about this, and how about this, and how about this? Some mornings we do nothing. It's as boring as can be. There's nothing happening. Other mornings we find a couple hot ones, right? And it's all based on news and what's going on. And we can never script that for the Wall Street Workshop. How can you? You don't know what happened the day before, what kind of news is out and all that. You just don't know, right? So we're trying to get some news out of these things. I was calling this morning early about mergers, you know, any announcements on things. There was nothing, right? So I'm trying to make this not boring for you all. But what do you got?
That's
Okay.
not optional.
That one's not optionable? Okay, is there anything else that you guys want to check on this stock split sheet? Okay, because could you, just for fun, Randy, could you tell me what Intel's doing right now? Intel.
64 and 3/8,
My
64 and
goodness.
a half, down a half.
Okay, so it's down a little bit. Okay? All the PBIO? Okay. Let's see. Does anybody want to do anything on Intel? You want to see what's going on? What are the January 6750s going for? Okay, does everybody understand when I say just a January 6750? Am I talking about puts or calls right now? So in theory, I should just say to him, what is a January 6750 call? Right? Now, he knows that I'm not doing puts, right? So he's my stockbroker here. He knows I'm not doing that. But until you get your stockbroker used to this, what if you called up your stockbroker and you said, just look down your Gillette sheet and just look at the same month, same strike price, and look at the difference in price between a put and a call. World of difference here, everyone? Just look at any sheet and you'll see that. So you really should say a January 6750 call until you get used to the fact that you're only talking about calls, you know, rights to buy. Okay?
5 and 5/8 at 6.
5 and 5/8. What do you think? You're out of the money by what? By about $3. You're paying $5. So the gamble here, if you spend $5, would be, you know, 5,000. Let's say you bought 10 contracts. It'd be $5,625. And what are you hoping for? Stock's already, I mean, it's split down to less than 60, split down to like 57, and in a week or so, it's already back up to 64. Can the technology stocks get hammered very quickly? And when there's bad news in Intel or IBM or any other company, can it just kind of contaminate everything else that's going on, you know, very quickly? It's pretty amazing. The technology stocks, the pharmaceuticals, the biomeds, they're all exactly the same way. They can get hammered very quickly. I own a whole bunch of these already. Okay, I may consider buying some more. I bought these at, well, I'll tell you what I bought them for. Before it split, these were 135s. Right. So can I make a quick point here? Remember I said yesterday that the options are always in the cheaper stocks in $2.50 increments. Remember that 5, 7.50, and 10, and so on. And when they get to 25, what happens to them? They go to $5 increments, 25, 30, 35, 40. Then why sometimes when you're checking on an option do you see something like this? You see something like the option is 26 and 5/8. I mean, it actually is that's the option. That's the strike price, 26 and 5/8. Yeah. Where did this come from? Why is it 26 and 5/8? Because that's right. This was like a 3-for-1 stock split or something like that. You see that? So you'll get some weird numbers from time to time in the options, right, on the strike prices, until what? When will all these weird numbers go away? When those options expire, right? And then you'll only see 25, 30, 35, 40s. Y'all see that? So there could be some weird numbers in there from time to time. So don't let that throw you when you see a weird strike price. It usually is accounted for a month or 2 or 3 earlier, a stock split. All right, now which one are we checking on? Oh, let me tell you what I got these for. I got these Intels, 135s. I bought them for $4.50. So what do I have? This one we talked about yesterday briefly. What do we have here, everyone? So now I have 2 shares when I did the split, right? 2 options at $67.50. And what did I pay for each one of those? $2.25. What could I sell each one of those for right now? Right around $5.50. Right, the bid and the ask there. Is that a nice deal, everyone? So what happens if the stock goes up another $1 or $2? And by the way, will the stock probably go up another $1 or $2? We don't know that for sure, but what's the likelihood? And you got to take a calculated risk here sometimes, do you not? And it's split, and it's going to go back up. What happens if the stock goes back up to $80 or $90 where it was pre-split? Would that be a nice deal? Because what will happen to my option then? See, the stock's already getting close to the strike price, is it not? You know, you know what? When I did this, when everybody told me I was crazy, when I bought this one for 4.5, I had people trying to talk me out of it, saying, wait, it's so far out of them. I said, I know, but it's doing a stock split. Yeah, but it's so far out of them. I said, look, it's doing a stock split. You know, this thing's going to split around $120 back down to 60. It's not that far away from 67.50, right? If you think about it. Now, $120 to $135, that sounds like a mile away, does it not? But $60 to $67.50 doesn't sound like very much, does it? And you can recover lost ground very quickly there. Now, everybody told me I was nuts for doing this one, and I've already over doubled my money. I'm just a little bit away from tripling my money, am I not, on this deal right here? I like it. And by the way, once again, you know what I did on this? And so I bought about 30 contracts in different companies. I took 10 contracts. I sold 10 contracts at around $5. Does that recover all of my money that I put in? Yes. Covered all my money plus a little bit, and I still own 20 contracts free and clear. Well, what word do I want to use here? I didn't pay for them, right? Yeah, it's like a free option because I got my cash back on all the money I spent on this thing, and I got 20 contracts. I'm just going to let the ticket ride, you know, and take the last train to Clarksville and just wait there, you know. Let's see, a couple weeks before January and see where Clarksville is at this time. All right? Okay, any more? Let's do, what's that other one? Okay, Randy?
Before you do that, I'll just tell you, they just barely announced, just within a few minutes, Hirsch International declares a 5 for 4 stock split.
Okay, is that on here? I thought I saw a bank. First International, what is that?
It's Hirsch, H-I-R-S-C-H, International. Symbol HRSH.
H-R-S-H? And they just announced a 5 for 4 stock split?
Yes.
What's the stock at?
Stock is trading at 14 3/4. It's up a half.
Okay, what options are available? Anything? This is an OTC stock, right?
Yes, it is. Let's see if it is optional first.
Yeah, 5 for 4. You know, that means if you had 4 shares, now you have 5. Right? It's not bad. So each share is going to go down from like 14 down to 12, right? You'll end up with 5 shares at $12 instead of 4 shares at 14, right? Not as exciting as a 2 for 1. Randy, let's not waste any time on that one. What's that?
It's not optional.
It's not optional anyway, right? Okay, let's do Texas Instruments, Randy. TXN. TXN. Now, I like this one, everyone. I mean, I like this. I've done this one the last couple days. I've been buying this one. Okay. Again, I like big companies. By the way, is Texas Instruments a well-known company? Is that important to anybody else here besides me? I like it. Now, I like some of these numbers on this Kalicki and Sofa and Xilinx and all that, but I've never heard of them before, right? I mean, I like to feel, see, touch, and be able to go to the grocery store and buy the stock in the company that I'm doing. Does that make sense to anybody here? And Texas Instruments is not the biggest, you know, electronics manufacturing firm, but are they big and are they well known? Okay, there you go. There you go. There's little calculators. All right. Okay, what is the stock at right now?
137 3/4 at 138 1/4.
Wow. So it's down. 136 yesterday, but a couple days ago it was 140. 141. Okay, so the stock's right around 137 right now?
137 3/4.
Okay, what is the like a December 140. Are they on your sheet here?
They have January.
They do?
They have October, then January.
Okay, so let's go to January then. Now this, everyone, is January of 1996. January, remember, we're a snapshot in time right now.
The 140s?
Yep.
15 7/8 at 16 3/8.
Okay. What do you think, everyone? Good price? Pretty expensive because, but it's not expensive relative to the price of the stock, right? You're still leveraging in big time, are you not? I mean, you're leveraging in a little over 10%, right? But the point is that this stock is going to split. Let's just say, and again, this is just guessing, let's just say that the stock splits at that 140 range. You're going to have 2 shares at $70, and you paid $7, almost $8, right, for the right to buy it at $70, clear out in January. But you got a good 5, 6 months left on it. How many months? 6 months left on this thing, right, for it to get up over $70. Okay, I don't know, guys. I think it's a good play. Again, it's my opinion. I can't, I'm not making any recommendations here. Okay, do you have Octobers there?
Yes, I do. October's 140, 11 3/4, 12 1/4.
Oh, this is October 140s, or what? 11?
11 3/4 at 12 1/4.
Okay. What do you think about that, everyone? Okay, I mean, think about this. You got this is what I have to do every day, and it kind of drives you crazy after a while, right? So you got until October, and you only have to pay $11. Or would you rather pay the extra $4 and buy until January? What do you think? It's like a judgment call on your part. What, do you like the Octobers or the Januaries? What do you think?
October.
You like the Octobers? I like the Januaries.
January, the stock splits take longer to come up, yeah, so you're trying to January.
Yeah, because this stock's going to split when? When's it going to actually, no, okay, but when's it going to be reflected? Okay, the Texas Instruments is going to be reflected. The pay date, everyone, is 8/18, right? So the ex-dividend date will be a day after that, which if there's a weekend, when will the ex-dividend, let's assume that 8/18 is a Friday. Randy, do you have a calendar there? We don't have a calendar. Is 8/18 a Friday? So what's 8/21, everyone? The Monday, just like Intel just did, just like all, they do it on a Monday, right? They split the next day. The ex-dividend date becomes the day after. So that means you have from August 21st until what if you do it in October? So you got 2 months for the stock to go back up, and it may do so, right? But would you rather have until October or pay that extra $4 and get to January? So what do you think? I get the, what's that?
Won't you get the dividend?
And by the way, if there is a dividend paid, you're gonna, if you bought this, well, no, you won't get any dividends because you're buying an option. If you buy the stock, you'll get the dividend. Is that right, everyone? So there's not a dividend play. We got other dividend plays besides this one. All right, people keep handing me, Randy. People keep handing me sheets of paper. All right, so okay, let's do one more option. I want to do a couple more of these covered call plays. Okay, and Randy, I just want to run through some prices very quickly on a bunch of these things. All right, how about micro age? How many heard of micro age? Okay, they're everywhere. MICA, Randy, MICA.
Okay, the stock's 14 1/8 at 14 1/4.
14 1/8. Now, can we get this chart up, Will, for a second? I want everybody to see this chart for a second. You'll see, I like this one, but I'd like it better if I could buy the stock at around $12, according to this chart here. Okay, what are the options on it? First of all, what are the July 1250s?
The July 1250s, 1 3/4 at 2.
Okay, is that the chart now? Okay, hang on just a second, Randy. We got the chart up on the screen right now. This Telechart 2000. All right, here is a $12 right in this range right here. Remember we said buy a stock on dips, right? Buy a stock on weakness and then sell the call on strength. Is this weaker or not right now? See, now this one, everyone, and again, some of you will not be able to do this because you'll not be able to go naked. This is a perfect one where you just go ahead and sell the call, right? And take the gamble that the stock's going to do what? Sell the call, and the stock goes down to 12, right? Then you buy the stock. Would that be a cool deal, by the way? What are the July 15s, Randy?
3/8 at 1/2.
All right. What is somebody saying here? Look at this. You got 3 weeks left until July, right? The expiration date in July. Are there not a lot of believers out there that this thing's going to go to and stay above $15? What do you think, everyone? Because even at its high, clear back in September of last year, it was a 15 1/4 or 15 3/4, right? So what's the likelihood with this company? That it's going to go to 16, 17 bucks a share and you're going to get called out at 15, or that it's going to float down around 12 and $13 again? What do you think? I mean, if you look at the chart, see again, you got a bottom here, you know, and then you're looking here, and you know, it's a judgment call again, right? But this one looks interesting, does it not? Okay, now I want you to see something here. I'm going to run the number. I want you all to run the numbers. Maybe your example number 6 on page 24. Example number 6. I want you to see something on this one. I'm going to give you guys the numbers, and you guys figure this thing out. What would happen if you could sell the call? Let's go ahead and sell right at the bid of 1 3/4. 1 3/4. You're going to sell. So this is the call that you're going to sell, and then you're going to wait 2, 3, 4, 5 weeks, whatever, and you're going to buy the stock at, let's say, $12. That looks by the chart. That looks so you're going to get the stock at $12. Now that is a big if. I understand that. Sometimes you have to run these scenarios to see whether it's worth getting involved. Okay, so run the numbers on this one and tell me what you get. I want to know what the rate of return is if you get called out and what the rate of return is if you don't get called out. Let's do the don't get called out first. What's that? Yeah, we're going to do the, no, we're going to, no. Oh, these are all the 1250s. Ignore the $15. All right, so stock is currently at 14 1/8. All right, so we're going to sell the call for 1 3/4, and we're going to buy the call on margin for $12 a share, which is $6,000 on margin plus commissions. Okay, somebody got that number? That's 29.2. Yes. 29%. I'm sorry. I put dollar signs in front of everything. All right. 29% return is what you're saying. And if you get called out, how much? How can it go down? It's got to go up, right? Because you're buying the stock at 12 and you're selling it at 12.50. You're picking up another $500, right? So what is 2,000? Take these two numbers. What is $2,250 divided by 6,000? What is it? 38. All right. Now is that a nice return for 3 weeks? But what's the gamble here? What's the risk? The stock goes up or the stock stays up. Because will you get called out? So if the stock just stays right around where it is right now, what is it? Now think this one through. Let me ask that question again. If the stock just stays, all right, you just got 1 3/4, right, for giving someone the right to buy the stock from you at $12.50. Right? If the stock stays right around, where is it, 14 1/8, what happens? You would definitely get called out. So what happens? If you bought the stock at 14 1/8, which is $14,125, and you get called out of those 1,000 shares at $12.50, that's $12,500. What do you have to do, everyone? How much? Now think about this one. With commissions, is it kind of a wash? Okay, is everybody with me on this or not? Did I lose you? Let me do it, and let me point. You sold the call for $1.75, right? You have, yeah, it's all intrinsic value. You sold the call for $1, it's even a little bit more than that. You sold the call for $1.75, and now if you get called out, you have to basically give back all your profits. And after commissions, it'd be about a wash. So what's the worst thing that can happen here? The worst thing that can happen on this deal is if the stock goes up to 15 or 16, you get called out, you break even, right? The worst thing is that you break even on this deal. What's the best thing that happens? If the stock goes back down to $12 and $13, what's the best thing that can happen here? You don't get called out, and what do you get to keep? The $1,700. So if you don't get called out, you get a 29% return on your money. If you do get called out, you break even. Is that a good calculated risk? What do you think? See, I like this one. I think that's a good calculated risk. If it goes up to $18 or $19, you get called out at $12.50, right? Right? So what? You lose your $1.75. Right? So you made $1.75, you have to give back $1.62. If the stock goes to $30 a share and you get called out at $12.50, so you lost some of the potential opportunity of it going really high, right? Yep. But what were we doing this for, everyone? Remember the answer? Cash flow.
We were covered on that, though, right?
Yeah, I'm saying this would be a covered.
You'd have to buy it at that.
Well, you're naked for a while, right?
While you're naked.
Oh, I see what you're saying. Because we were naked on the stock if the stock really did take off. Yeah, when we were naked, that we do have that risk. Yeah, that's right. We really got to get, what's that? Okay, Randy?
Yes.
What is a 1250 put on this thing?
1250 put 1/16 to 3/16.
So what are you saying?
So you have to put a buy in, that point, so it wouldn't go any higher, so that you would stay with an even bet.
So you're saying then is that if you're going to do the original play,
Right.
would be to go ahead and put an order to buy it at, say, 15 or 15 and a half.
So it wouldn't get uncontrollable.
Right. Or even 16, so you've really limited your upside. I mean, you've limited your risk exposure. Okay, right. Okay.
Isn't it going to be called out almost immediately, though? So it's
It could. Now remember everyone, that in American-style options, you can get called out on or before the expiration date. So you could buy this option tomorrow and get called out like 2 days from right now. But all the stocks that I've owned for the last years, I've been called out early about 4 times, and I do about 30, 40, 50 of these a month. And when I get called out, all of a sudden I call my stockbroker one day and he says, hey, you got called out of 200 shares of Seprecor or whatever. I said, really? I mean, it's like 3 weeks away from the expiration date, and it happens once in a while, but not very often. Like, in my case, probably 90, 95%, even more than that, of all my stocks get called out on the expiration date. You know if this MICA is up or down today, Randy?
It's down an eighth.
Okay, what about a $15 put?
15 put, 1 and 3/16 at 1 and 7/16.
See, you could buy that, but you would just be breaking even then. All right? And we'll talk about puts a little bit later. Okay, Randy, anything else? I just got a couple more that somebody just handed me.
Okay.
Where did they go? I don't know what I did with them. Okay, here we go. Well, here's one. Let's see if this one is optionable. Garrity Oil, ticker symbol is GOG. I was going to give you a biblical question there on this one. Gog and Magog.
It's not.
GOG is not optionable? Okay, this says it is, but it's not.
It's 3 1/4, 3 1/2, and it's not optional.
All right. How about NovaCare? Ticker symbol is NOV. NovaCare. I've heard of this. I've heard of this company. We've done this one before?
It is. It is optional.
Okay, what do we got? Okay, what's the current price?
7 7/8 at $8.
Okay.
$7.50.
NOV is 7 7/8 by $8.
That is correct.
And what are the 750s?
9 and 9/16 at 13/16.
Okay, and the 10s? Anything on the 10s?
No.
All right, y'all see that? Why isn't there anything on the 10? There's just no bid on it. Nobody's willing to bid on this thing. Why? Nobody believes at this point in time that it's going to get up to $10. Okay, do we have a high and a low on this one?
On the stock itself?
Yeah.
Yes, a second. For the year, 17 and an eighth, and a low 7 and 1/8.
I like that.
Can we see the chart?
Okay. Do we have a chart on this one? He'll have to get it. Okay, now, by the way, does anybody get excited about this one right now? If the stock continues to go up, you know, you could buy the stock now and wait for the stock to go up, and hopefully that you start getting some 10s or whatever. But right now, if you were to do it right now, buy the stock and sell the call, is it exciting or not? Not very exciting, right? Because you're only going to get about a half, and then you'd have to give it all back if you got called out, right? So it's another break even at worst, you know, if you bought the stock and did the call. All right. Okay, we're going to go through a whole bunch of them like that in just a minute. Let me just quickly go through these charts. Hey, Randy?
Yes.
Here's one called AQM. This is wild. The company is called QMS Incorporated. The ticker symbol is AQM. That's weird.
It is optionable.
Okay.
5 1/4 at 5 3/8.
Okay, so here's another cheap, low price stock, everyone. AQM. The name of this company, again, is QMS Incorporated, right? Is this it here? Look at this chart, everyone. Now, it's bottomed out since last March down in this $5 range, $5 to $6, a lot. And look at this, there's been a lot of volatility. This looks like a good rolling stock candidate. We'll talk about that a little bit later. Okay, it's currently at what?
5 1/4, 5 3/8.
And what are the Julys?
3/8 at 9/16.
That's a July $5?
Let's make that 7/16.
Okay, that was a July $5 strike price?
That is correct.
Okay, 3/8 by 7/16?
Make that 7/16 on the bid, 9/16 on the ask.
Whoa, did that just change?
No, I've got 2 markets on it, and I just pulled up the other one.
7/16? By the way, can I take a guess that the second one you pulled up is Chicago?
That is correct.
Okay, now everyone, remember I said that yesterday? A lot of these guys will go shopping around on New York, you know, because it's easy access on their computers. But as soon as they shop over to Chicago, there's usually a little bit higher bids on Chicago. So you should ask that, by the way, to your stockbrokers. See what is going on in Chicago. They'll get a bid off of New York and then see what's going on in Chicago, and it's usually a little bit higher, right? So it can make you another couple pennies per deal. All right, 7/16 by what?
9/16.
Okay, what do you think, everyone? If you could buy the stock at 5, right, and get about 50 cents for it, would that be an okay deal? Because that'd be about a 20% return right there, even if you got called out, because you break even if you got called out on that part of it. You like it, everyone? This one's worth doing your homework because it's a cheap little company. Couple hundred, you know, $400, $500, $600 can buy you some shares to get involved in this one, right? You can get involved in this one. To those of you that are just looking to get into one, again, I don't know anything about the company, so I'm not recommending it at all. Okay, Randy, let's just go through a list of a whole bunch of our favorites. How about PBIO? Just give me stock prices, and we'll see if you can do the quick quotes on them. I'll just put up a whole list of them here on the screen.
Okay, I've got 9 7/8 at 10 1/4. I've got the 10 July's 11/16 at 15/16.
Okay, the $10 is 11/16
That is correct.
by 15/16.
That is correct.
Man. Okay, how about
Let's make
zone?
that now 3/4 because I did get the other market. 3/4 at 7/8.
Well, that's worse. Okay.
No,
SE.
that's better. 3/4 is higher than 11/16.
Oh, that's right. I'm sorry. Yeah, but okay, isn't that interesting? The bid is high. The ask is higher here, and the bid is higher here. Right?
No?
No. 15/16 is better than 7/8.
No, 7/8 is lower.
That's what I said. 15/16 is better than 7/8.
Yeah,
Right?
but that's the ask.
But 11/16 is lower than 3/4. So it's like they should be switched around. Okay, SEPR. SEPR, Seprecor.
Okay, I've got stock at 13 at 13 1/4.
Okay.
I've got the 1250s coming in at $1 at 1 1/8.
Okay, and anything on 15s?
1/16 at 1/4.
Yeah, see, there's nothing there. Okay, what's that? SCLN. This is that cyclone. SCLN.
Okay, the stock is 6 3/8 at 6 5/8.
Is that up or down today?
It's unchanged.
Okay, it's
Last
unchanged.
trade is 6 3/8.
Okay, what are the 750s going for?
An 8 at 5/16.
Wow. Okay, good. I got to go buy back some. Okay. Copytel, COPY.
Stock is 7 3/8 at 7 3/4. It is up 3/8 for the day.
Okay.
The 750s are coming in at a half at 5/8.
That's not too bad, everyone. Not too bad. Okay, how about First Alert, ALRT?
Stock is 14 1/2, 14 3/4. It is unchanged. I've got the, let's see, the 15s are 3/8 at 9/16. Oh, yes. Now let's make that 7/16 at 9/16.
7/16 by 9/16. Okay. How about GTR? This is the Mexican stock, everyone. Grupo Tribasa.
7 3/8 at 7 1/2.
Okay. And the
The
7.
options on the 750s, 3/8 by 5/8. Make that 3/8 by half.
Okay. I'm gonna put that aside. What's that? Oh yeah, Amdal. AMH.
11 1/4, 11 1/2.
Wow. Okay. What are the 1250s going for?
1/16 at 1/4.
What do you think, everyone? No believers on that stock right now. Okay, how about ORG? ORG.
Stock is 13 and a half at 13 and 5/8.
Okay.
Down an eighth. The 1250s, 1 and 7/16 at 1 and 11/16. The 15s, 11/16 at 7/8.
That's not bad, everyone.
What's the high and low?
Do you have the high and the low for a year on that one?
One second. '20's the high, 9 and 3/8 the low.
That helps, doesn't it? Okay. Not bad. Okay.
There's a chart.
What's that? There's a chart, everyone. So, you like these numbers?
Yeah.
What do you like? Which one do you like? The 1250 or the 15? Okay, when Randy's off the phone, we'll run the numbers on this one. This one looks interesting, everyone, because if you get called out, it's going to be very profitable. That'd be a nice deal. So let's keep the numbers on this one. Just a couple more, Randy.
Zone?
Yeah, I don't want to do zone. You got Randy, zone. We had the wrong numbers on it yesterday.
Okay, I've got zone at 9 and 1/16.
Okay.
The
The $10.
the 10s 1/16 at 5/16. Last trade 5/16.
Totally different than the numbers we had yesterday. Remember that? Okay. Oh yeah. How about IQ?
Okay, the stock's coming in at 9 and 7/8 at 10. The 10s are a half at 3/4.
Okay. Okay. One of the best ones we put up here so far, everyone, has been this one right here. Hey, how about IDC, my old favorite?
What's the high and
Stock
low?
is 7 and 3/8 at 7 and 7/16. The 750s, 7/16 and a half.
By the way, is that a tight spread on that? Okay, it's 7/16 by 8/16, right? What do you think, everyone? Okay, this one, we ought to look at this one too. So let's run the numbers on this one again. Okay, Randy, any more? Yeah, hey, how about, yeah, let's check exabyte and let's check I omega. EXBTE.
Okay, the stock's 13 and 7/8 at 14 and 1/8.
Okay,
The 1250s are 1 and 5/8 at 1 and 3/4. The 15s are 5/16 at 7/16.
and the 15s are what?
5/16, 7/16.
Okay.
What's the high and low of that?
You have the high and the low on this company?
What's that? '24 is the high, 11 and 3/4 is the low.
Okay, I like it. Okay, how about I omega? IOMG.
Stock is 20 and 7/8 at 21 and 1/8. It's up
Wow.
an 8 for the day.
Okay. What are the 20s and what are the 2250s?
Second. Okay, the 20s, 2 and 1/4 at 2 and 1/2. The 2250s, 1 and 3/16 at 1 1/4.
What do you think, everyone? You like this one or not?
What's the high and low of
You like them both or not?
Yeah.
I like them both. We ought to run the numbers on this one. Hey, Dale, Randy, one that I used to do quite a while ago was a company called Storage Technologies.
Okay.
STK is a ticker symbol. What's going on with that one lately?
STK is 25 and 3/8 at
Oh, it's
25
way
and
up.
a half.
25 and 3/8,
That is correct.
and what are the 25s?
25, 1 1/4 at 1 3/8.
Okay, anything on the 2750s?
There is none.
No, 30s?
30's the next, and 8th at 316.
Okay, so there's nothing on the 30s. That's good. Okay, just for fun, let's check a couple of our old favorites that we've talked about here in class from another point of view. How about Novell? What's Novell doing?
Novell is 19 and 7/8 at 20.
Remember my story, everyone? Well, a year ago, 2 years ago, I was buying 16, 17, 18, 19. Every time it dropped under 20, I'd buy a bunch of it. You know, here it is again, under 20. You know, and by the way, it got down to 18 a little while ago. It just keeps back up to 21. Okay, what are the 20s and what are the 2250s?
3/4 at 5, or excuse me, 3/4, 15/16. The 2250s, 3/16 at a quarter.
These are all Julys, right?
That is correct.
Interesting, isn't it? Now let's just say we got $1 over here. You know, 15/16. Remember, if this is 5% of this over here, then your rate of return is going to be 20%. I'm sorry, 10%, right? Remember that whole thing? So there's nothing really to speak of right here. Okay, Randy, if you find any more or any companies like that that look good, will you call back? We're particularly looking for anything like between $8 and $15.
Okay.
All right. What's that? Zenith again? Yeah. Can we check Zenith again? ZE.
7 1/2 at 7 3/4.
Okay. And the 750s?
3/8, 9/16.
It's just right there, isn't it? I mean, it's just like, you know, you'd have to get the stock at right at the money, right? You get a nice premium, but you'd have to get, you know, you'd break, I don't know. Interesting if you could buy the stock at 750 instead of 7 3/4, right? Because you wouldn't want to buy this one at 7 3/4, would you? Okay. Okay, Randy, anything else? Any other option plays?
Not right
I
at
may
the
call you back a little bit later because I want to do some stuff on those Texas Instruments and all that.
Okay.
If you hear of any more stock plays or anything else happening today, will you give me a call?
Sounds good.
All right, thanks.
Okay, thank
Bye.
you. Okay, bye-bye.
All right, now this exercise, this is what I do every morning. I just sit here and just do these numbers like this, right? Is it boring sometimes? Okay, yeah, it is. Oh, by the way, I want you to read this. Now, too bad, by the way. No, this is the stuff from yesterday. This is the stuff that was up here. I wanted you, before we end this, I started saying some stuff yesterday, and I want to make sure that I'm saying the right stuff about this company. I think I'll have to find it, but this, by the way, this is a Dick Davis Digest. I really like this little newsletter. But there was a whole article in here about Tootsie Roll, right? The sad part about Tootsie Roll is that it's not, you know, it's not optionable. Where did Tootsie Roll go? So, you know, there's no sense in doing that much on it, but there was a great article on it. I'll have to find it a little bit later. All right, again, everyone, this is what I do every morning. We just sit here and go through these stocks. I shop around. Some mornings it's totally boring. I hang up the phone. Nothing's happening. And then the next morning I call and there's 3 or 4 stocks. Now, we found out about a stock split today, you know, on the phone. You know, he was able to tell us right there. Wasn't that exciting? But that's the kind of stuff that happens. Now, you don't have to get up every morning, but I'll tell you what, if you make it a habit of getting up and calling a stockbroker and going through numbers and scouting around and looking around, having him do the research on you. By the way, now, if I wanted information on some of these companies, could he send me reports on them? He could fax me things or mail me things. I could get all kinds of information. And this is it seems like our brains are kind of awake and alert all you know, in the morning once you get up and get moving. Really? But it's a good time to shop around, and that's all that we do. And by the way, then after 7:30 or so, like right now, go back to bed. Right, go back to bed if you need to. But you got to get up to find out what's going on during the day, because a lot of the plays happen the first part of the day. A lot of the takeovers, the mergers, they all happen the night before. As a matter of fact, I lose out on a lot of plays. When there's a hot deal, why do they always announce the hot deals after the market closes? On a Thursday or a Friday or something like that. Even late in the evening. Then all of a sudden it goes out over the news wires, but all the stockbrokers, everybody's gone home, and the market's closed, they can't trade in the stock anyway. Could it get to the point that the next day, if there's a big, huge merger going on, that the next day that the stock doesn't even trade? What happens, everyone? They suspend trading. They stop trading. By the way, can they stop it in the middle of the day? There's too many things going on. Too many stocks, it's an imbalance. Too many people want to buy it. Price is going crazy, but nobody wants to sell it, right? So there's no bid and ask. They can't do it. So they just suspend trading until everything calms down. The company puts out good news or bad news, the stock falls, the stock goes up, right? And then suspends trading. A lot of that happens in the morning. So we go chasing them in the morning sometimes. For example, we hear that there's going to be a big, huge merger. Or, for example, we try to do Chrysler. Remember that Krikorian thing? By the way, has anybody heard what's going on this week? I think Chrysler's back in play again, guys. Krikorian has now come in with an offer at $50 a share, not 53, at $50 a share for 15 million shares. Is it 15 million? No, it's more than that. But whatever, he's going to come back in with an offer to take over a big part of the company. It's not going to be for the whole company like before, you know, to take the thing private. He's just going to make an offer. And the stock went up like $3 yesterday. Actually, it did go up $3. It's at 40 cents. It went up about 50 cents on the news. By the way, do you think this guy is going to make another bid on the company and lose this time? Or do you think he's got his ducks lined up this time? What do you think? Got all of his financing lined up and all that. So Chrysler was in play yesterday. So we tried to get some options on it, tried to do some stuff. We were too late, right? They're real cheap, but then they went skyrocketing. As soon as there's an announcement like that, the option went binging up there, right? And so we didn't chase it, right? But sometimes in the mornings we do try to chase them and try to get them. Well, anyway, that's what we do in the morning. And so let's go ahead and take a break at the Wall Street Workshop. You live people here, let's go grab breakfast and come back for the main session in about 10 minutes. Well, the seminar's rolling right along. The next section is about short selling. Let me tell you why we brought that into the play here. Because the stock market is volatile, it does go up and down. Well, even in bad times, you need to learn how to make money. And even in kind of mediocre or good times, you need to learn that particular stocks may go down, and how do you take advantage of those? That's called short selling. And we're also going to tell you how to hedge a short sale, which means kind of like buy insurance on it. Well, let's get back to the seminar, and you'll learn how to do all of these things. This next session is going to be on short sell. Now, I'm going to tell you several things here, and one of these things may make you a little bit angry, because it sure made me angry when I found out about this. And we're going to talk about a short sale, what it is, and then I'm going to give you an example of what happened between me and America West Airlines a couple years ago. Then I'm going to tell you my problems with short sales, you know, with doing them, and I'm going to stay right up front here that I don't do very many of these. Matter of fact, I've only done one effectively. I know how to do them, right? And there's another play that I like better than a short sell, and I'll tell you why in just a minute. Here's an example of a short sell. You think that a stock that is currently at $10, it's hit a high at 10, and it just cannot sustain that price. You just don't see it sustaining that price because it just bounced up there on a fluke. The news is played out, and you think it's going to go back down. It's been $7, $8 a share for a long time, and you think it's going to go back down to the $7 range. Well, here's what you can do. You can sell the stock at $10. You call up your broker and you say, I want to do a short sell, or I want to go short on XYZ stock at $10. Okay? And he'll place the order, and I'll tell you how hard it is to do in just a minute, but he'll place the order, and you will in fact sell this stock for $10. All right? Your hope is that if the stock does go down, if the stock actually does go down, you could buy it back for $7, right, and replace the $10 stock. And you'd, in this example, make $3 a share. All right, now I know that that sounds weird, so let me explain how it works. There are 3 parties involved in this. You should be on page 34 of your manual. There are 3 parties involved in a short sell. One of the parties, and I'll keep using this example, one party to this is the seller of the stock. That will be you in this example. A second party is the buyer of the stock. That'll be somebody that you do not know, some person out there, and as soon as he buys the stock, he's out of the picture, and you never hear from him again. This third party, though, this third person is the lender. And this is an important part of this whole thing. See, you really can't sell something that you don't own. So in fact, somebody has to lend you the stock. They have to loan you the stock. Well, who is that? So you call your stockbroker and say, I want to do a short sell on this company, XYZ company. Now, the stockbroker, if he owns, listen carefully, if that stockbroker owns the stock himself or herself, then they can loan you the stock. Or they could find a client among all their clients that would want to loan you the stock. But somebody has got to loan you, let's use 1,000 shares. Somebody has to loan you 1,000 shares of this XYZ stock. Okay? So let's see how it happens now. You want to do a short sell. You call your stockbroker. He finds somebody to lend you the stock. You, in fact, are borrowing 1,000 shares of stock, and in your account now, you sell those shares. You borrowed them, now you sell them. In 1,000 shares, you sell them at $10. That generates $10,000 cash into your account. Now, there's a negative hold on your account, right, because you're short in this stock. A little bit of a negative hold, so you just can't go spend that $10,000 because they're going to hold the money to actually purchase a stock. Now, and by the way, this can affect your margin balance. If that stock goes from $10 to $11 to $12, man, that really comes in and affects because you have you have a short position in your account. Do you think that that shows up as a positive or a negative? Negative, because you have to, have to pay that. So they're going to put a little hold on the cash in your account, and it'll really affect your margin balance if it keeps going up. But let's say that the stock does come down. It was at $10. Very quickly, you short sold it. Then it goes to 9, 8, and 7. And at about $7, you say, that's it. That's all I think I'm going to go down to. I want to get out of this position. So now you buy the stock back at $7 a share, or $7,000. You buy the stock, and you basically repay the lender. So now you take the 1,000 shares, and the lender gets his 1,000 shares back, and you now have freed up and get to keep that $3,000 profit. Okay, this is a short sell. Okay, and I'm going to show you how to hedge it in just a few minutes, but this is a short sell. It's not that complicated. And once you understand the concept behind it, is you're borrowing stock, selling it, and then paying back the stock at a lower price. Okay, it's just that simple. So don't make this too hard.
What's the lender get out?
Okay, what does the lender get out of this? By the way, first of all, what is the lender hoping for? If the stock, he's lent you the stock, so he gets, number one, he gets an interest on it. Earns interest, 7, 8%. So he gets interest on it, and by the way, quick point, it's basically still the lender's stock, right, that he's just loaned you? Still his stock. If there are any dividends paid in any time during that, so he gets interest and any dividends. All right. Now, but the stock's gone, right, because you sold it. Now, what is he hoping for? It's a gamble on his part, everyone. He's hoping that the stock will go to $11 or $12 and just sit up there. And at some point in time in the future, are you going to have to repay that stock at $12? So you have to buy it at 12 to repay your $10 loan, your 1,000 share loan. That's what he's hoping for, right? What's that? How do you protect yourself? All right, we haven't talked about puts yet, but let me finish this up, and then I'll show you how to hedge this. All right. This is leading up to another way of doing this, and I'll get down to the puts in just a minute. Everybody makes it sound so easy. I've read the books. I've been to the seminars about short selling, and I say, these guys make it sound so easy. Go try it. I'm going to ask you guys here in the class, go try it. Just for fun, just pick up 5 stocks out of the air, call up your stockbroker and say, I want to short sell this stock. Just try it. Bet you can't do it. Just pick any, just randomly pick any 5 stocks and call up your stockbroker. Because doesn't it have to be a willing participant on the other side? And by the way, I wanted to short sell America West Airlines. I called 9 stockbrokers before I found one that would let me do a short sell. And I had to open up an account there, send them all kinds of cash, right? Because I was going to short sell America West Airlines a couple years ago. Guys, it's just not as easy as it sounds. So let me tell you my problems with it. You know, trying to get it done. Let me tell you my problems. One problem is that it's a lot easier than it sounds. I mean, it's a lot harder than it sounds. It's easy to talk about, hard to do. Yes, which is my point, right? Which is number 2. You're one step ahead of me. Thanks. My problem, everyone, is this. I have a philosophical problem with doing short sales. This is just Wade Cook talking. Okay, I have a philosophical problem, and I have 2 of them, really. This is going to be number 2 and number 3. My problem is this. When you have a whole bunch of people short selling a company, right, what is their tendency to do? If there's a whole bunch of short sellers lined up gambling, betting that a company's stock is going to go down in value, is there a tendency to be like a naturally fulfilled prophecy that it's going to go down? What do you think? Yeah, it does. It happens all the time. When there's a whole bunch of short sellers betting on a stock going down, you'd be amazed that the stocks go down. So my problem is that if I were well, that's my number 3. If I were a publicly traded company, I don't want to do to somebody else what I wouldn't want somebody doing to me. All right? So a while ago, we went public with Profit Financial, which owns all of our different companies, right? Profit Financial, ticker symbol is PFNL, right? And it's trading right now, and it's doing very, very well. But I don't want anybody short selling me. So my point is this. There may be people out there short selling me, but I don't want to do it. I don't want anybody doing it to my company. Therefore what? I just want to do it to anybody else. All right, now let's go back to point number 2, this philosophical problem from a market point of view. What has the market continually done? It's gone down and dips, right? So the consistency is that it goes up, comes back, goes up, comes back. I just don't think you can get rich doing short sales on a consistent basis. I just don't see it happening. But with the last couple of years, short sellers have gotten hammered out there, right? Whole mutual funds that invest in short sales. And you got mutual funds, 18.2% returns, 17.2% returns, 15.4% returns, and then all the short selling mutual funds, minus 7.8% returns. Because can they get burned on this thing, everyone? Yeah, if stocks go up in a good market, boy, they're left holding the bag and they got to replace their stock. So I agree with you. I don't like it. I don't like it philosophically. I don't want to get involved. Now, there is another side to this, though. Yeah, you just don't feel good about it, right? I don't feel good about it either. I don't like short. That's why I did it. But before I move on, let me tell you my one quick story about America West Airlines. I made a fortune on America West Airlines. I mean a fortune, like a couple $100,000 doing a rolling stock, which we'll get to rolling stock here in a few minutes. That America West Airlines was trading like at $8 a share, $10 a share, 12, and even got up to 16 when they got a gate in Hawaii. The stock was going crazy, and I lived in Arizona at this time. I was buying all kinds of America West Airlines stock, and then all of a sudden, almost overnight, it went down to 8, went down to 6 the next day, and a couple of days later announced bankruptcy and went down to $2 a share, right? And then it went down to $1, and it even got down to 40 cents for a while. Just kind of sat there and did nothing. No bid, no ask, nobody buying it, nobody trading on it. You know, during bankruptcy, can a bankruptcy proceedings get pretty wild? Yeah, pretty stagnant sometimes, pretty aggressive sometimes, right? And the stock just floundered under $1 a share. Well, I started buying it at 40 and 75 cents. And by the way, I bought some at 40, sold it at 75, bought a little bit at 40, then the next time it went up to $1.25. So then I started buying it at 75, and it went up to $1.50. Then I started buying it at $1, and it went up to $2. And I made a ton of money. Matter of fact, when my wife was doing one of those reports, just on her IRA, she goes, "Geez, Wade, did you realize that $2,000 we had into the IRA last year, you made $19,600? I said, no, I really didn't make that much because we still have the $2,000 that we put in. I only made $17,600, and it was 4 months, by the way. It was 4 months. With this rolling stock on America West, I took $2,000 and turned it into $19,600, you know, $17,600 profit in 4 months. Let me tell you what happened. We were following this one pretty closely, just rolling it up and down and making a lot of money. We got a report one day that there was going to be a big merger. Actually, a company was going to take over America West Airlines. And by the way, just a few days before that, the ticker symbol is AWA. A few days before that, they announced of the 25 million shares of stock that were outstanding, that they had a $25.8 million net profit. it came out to $1.08 a share. Pretty good, everyone, for a stock that's trading at $1? Sounds good, right? But you got to read between the lines. Problem, there's $200 million in debt that's not being serviced. Right? Can a bankruptcy do that? It just puts a stay on all the debt, right? So there's $200 million in debt sitting over here that's not being taken care of. Now, somebody comes in and makes an offer to buy the company. And everybody got really excited about this. The stock's going up to $2, back down to $1.50, then up, right? And right in the middle of all this, somebody else made an offer to buy the company for $220 million. And it sounded so cool. They called this an equity group. What the heck is that? An equity group. Well, not just people with money, but people that have equity in the company already is what it usually refers to. How many of you know how America West Airlines work? Every time somebody got a paycheck, what do the employees have to do? Flight attendants, mechanics, pilots, what do they have to do? They took out 10% of their paycheck and bought stock in the company, right? So they have all the employees own a lot of stock. By the way, after years after years after years of doing this, can that be a lot of stock? So the employees have a whole bunch of stock. So they went to an investment banker and they said, hey, would you help us raise $220 million? Yes, we will. And then right before they put the deal together, the investment banker wanted $4.5 million, something like that. And the group thought they were only going to pay $2.5 million, and they just canceled the deal. They were not going to raise the money for $2.5. They wanted to raise it for $4.5 million. The deal is off. Now, boy, during this time, though, the stock got up to $4.25 a share. Just rolling like crazy. Unbelievable. Like every 2 or 3 days. $1, $2, $1.25, $2.50, back down to $1, up to $2. It was an amazing thing. We got a fax message, a lot of the services that we subscribe to, and it went down the page like this. There's a long page, by the way, and it was just on one side of the page, just like what I'm showing you right here. And you're reading it, sounds really cool. This Continental Airlines and Mace Air Group and a whole bunch of, they're going to form a partnership called AmWest Partners, and they're going to take over the company, et cetera, et cetera, et cetera. And they're going to do all these new flight arrangements and be able to tie the airlines together and all this kind of stuff. But then you get down to the bottom paragraph, right down here at the bottom of the page, and there's this little thing, a little paragraph right there, the last paragraph of this news announcement. When I read it, I literally just shook. My whole body just shuddered. Now, I had never made a recommendation on America West, but because I had talked about it at some of my seminars, I knew that some of our, Wealth Academy, our Cook University students were, were doing it. We're doing America West. I immediately went into a studio, put together a cassette tape. We had 800 students that had come through our class. I didn't know if any of them at all or none of them were buying America West, but I mailed out a cassette tape the very next day to every one of them, telling them my feelings about America West and explaining what was going on. Let me tell you what that little paragraph said. And this is getting approved by the judge, by the way. Can a judge just mess up a company? What do you think? These guys just can mess up a company. I've had a Circle K stock. I had a bunch of Circle K stock that was just disallowed. I got a letter one day saying, your stock is no longer valid, right? The company's been taken over by another company. By the way, then they ran it for 2 years, and they just went public again at $4 a share a little bit ago. So all of us guys that believed in it, that bought stock in it, our stock was just disallowed. Watch this. Remember, the stock was around $1 when this whole thing was put together. Right here in this paragraph, it said that the new company was going to have 45 million shares of stock, and the old shareholders were going to get 5% of the new company. And I just shook. Why? Anybody see a problem here? Yeah, because look at this. 5% of this, let's just round off, that's about 2.5 million, right? 5% of 45 million. So what they're saying, this is not a reverse split. It looks like a 10-to-1 reverse split. Y'all see that? So 25 million shares is going to become 2.5 million. That's not really, it's like that, but it's not really true, because in this example, guess what? In this example, they're just disallowing the old stock and giving the old shareholder stock in the new company. All right? So, and here's what's going to happen. Then this stock is going to come out and trade at a little under $10. In fact, it came out at $8.89. So the point is that for each 10 shares of stock you owned in the old company, you're going to end up with 1 share of stock in the new company, right? Actually, $8.89% shares in the new company, and it's going to then trade at $8.89. And sure enough, that's what happened. In August of last year, 1994, this stock came out and it traded at $8.89. It went right up to 15, 16 bucks. It's been cleared back down to 6 and 7, and it's back up to around $13 right now. Now, the point is this. When they first made the deal, if you own the shares of stock at $1 and you ended up with, and 10 shares of stock would be $10, correct? And you ended up with 1 share of stock in the new company at $9, is that okay? That's kind of a wash, is it not? A little bit down, but it's not too bad. But what happens if you bought that stock at $3.75 and $4 and $4.25? What happens if you take your 10 shares of stock not valued at $1 now, because it's been 3 or 4 or 5 months, now your stock is valued at $4 a share, your 10 shares of stock is worth $40, and the very next day, your stock is worth $8 or $9. I got on a plane that weekend flying from LA to Phoenix. The flight attendants weren't even talking. They were absolutely livid. I got on the plane and I said, so you guys heard about it, huh? They said, what are you talking about? I said, I'm a shareholder too. They were just screaming. They were mad. They would not even serve the customers. I'm serious. They were so angry that weekend. Would you be too? Because a judge sitting in his little office came up with this deal. Now look at everyone. This new company is going to take over basically 95% of America West Airlines. Look, if they're making $25 million net profit and they've got $200 million in debt, what's another alternative? Rather than just disallow the stock and undo the company, let these guys come in and rip it off, right, which they did, what could they have done? Well, what could a company do? Do you think that the debtors or creditors? Do you think the creditors would just like wait 8 years and get all their money? Because how long would it take to pay off the $200 million? What do you think, everyone? 8, 9 years. And by the way, what if they get more profitable next year? So they're paying off all this debt. So they could have, and they should have, what? Made terms, paid off the debt, worked out a deal, right? Instead of just disallowing the stock. I was so angry by this that a judge and America West directors would do this. I violated my philosophical principles of not doing short sales. This one ticked me off, so I sold it short. By the way, I made 2 times $3,000 on selling it short. I called my stockbroker and said, I want to go short on America West Airlines. When everybody finds out what happened to this stock's going to take a plunge. You know, actually, this one here is going to take a plunge, this $4 stock. And I only invested about $5,000 times 2, and I made $3,000 profit on each one of them. Okay, so that's the only time I've done a short sale because I was so ticked off. Right? Now, I brought that up here because I know it's a little bit of a negative story, but when you get involved in companies that are going down the tubes, can this kind of stuff happen? It happens a lot. So you should be very, very careful of bankrupt type companies, Chapter 11 reorganization type companies, because a little old senile judge can mess up your pension plan. Right? You just don't know. All right, so now let's go talk about another strategy. Instead of doing a short sell, there's one more strategy. If you think a stock is going to go down, there's another strategy, which is to buy a put on the stock. To buy a put. So we need to talk about puts now. A put, as you remember from our definition yesterday, equals the right to sell. It's an option. It's a put option that equals the right to sell. So if a stock, let's say, is around $12 a share, and you really think that it cannot sustain the $12 range, you think it really is a $9 stock, you call up your stockbroker and say, what is a, well, you could check 2 of them. What is a $12.50 put and what is a $10 put? And you would pay a premium. Just like when we buy a call to buy the stock, now we pay a premium to buy the put. And what are we hoping for? What are we hoping for? So remember, in a call, we're hoping that the stock goes up. And then we either buy the stock or we sell our option. In a put, we're hoping that the stock goes down. Right? So for example, you may pay for a put option, and I don't do a lot of these, by the way, because again, I don't believe in betting on stocks going down. I do these. I'll show you what I do, by the way. There's a strategy on puts that I really like, but I don't buy a lot of puts. I sell them. Okay, I'll show you that strategy in just a minute. This could be like 75 cents, and this could be like $1.50. And you buy a put. Now, if the stock goes down from 12 down to $9, then this $1.50 becomes worth $2.25, becomes worth $2.75, becomes worth $3.50, and the value of your put from $1.50 goes up as the stock goes down. And by the way, can you get out of this put at any point in time? Okay, now, do you remember we talked about with calls, in the money, at the money, and out of the money? With puts are exactly the opposite. Let me give you the definition of a call. An out-of-the-money call. An out-of-the-money call, where the strike price is, okay, let me say it the other way, where the current price of the stock is lower than the strike price. Okay, the definition of a put. the current price of the stock is higher than the strike price. So for example, if this stock, well, by the way, if the stock's at 12, is this in the money or out of the money? This is in the money. Is this in the money or out of the money? This is out of the money, because the strike price is above, I'm sorry, the current price of the stock is above the strike price. And again, with a put, you're gambling that a stock is going to go down. Right, so instead of doing short sales, you could call up your stockbroker and say, are there options available on this company? And if there are, then you can buy a put. If you think that the stock is going to go down, buy a put. Is this another form of leverage? So why are we buying a put? Because it's a form of leverage. All right? Now, before I go on, I want to show you a strategy that is really fun. Before I go on, I want to just show you how to hedge that short sale. If you ever get involved in short selling, let me give you one little strategy on hedging a short sale. Let's go back to that example. If we bought the stock at, say, $12, and we think that it's going to go down to 9, or we buy it at 10, and we think it's going to go down to 7, it doesn't really matter. One of the ways that you could hedge your bet, because what's the risk here? If you're short selling a stock and you've actually sold it on borrowed stock, what is your risk? If the stock goes up. Right? If it goes flying high, then you could get, all right? So one of the things that you could do, it costs a little bit of money, but one of the ways to hedge a short sell is to buy a call. So in this example, we would buy a call at, say, $12.50. In this example, we buy a call at $10. Now, if the stock goes down, are we okay? Because we make money. What if the stock goes up now? Have we limited our upside risk now? Because if the stock goes to 13, 14, 15 bucks, what have we done, everyone? We have the right to buy it at $12.50 or at $10. Okay, so if you ever get involved in short sales, this is like insurance on the back. Does insurance cost money, by the way? Is this insurance? This is insurance that if the stock runs away from you, you have the right to buy it back down at that $12.50 range. Okay, so that's called hedging a short sale. All right, now, the one I want to talk to you about, though, everyone, is, there's an example in the manual. That's correct. Hey, I'll show you one more strategy with options right now before we move on. I'll tell you what a lot of people do. A lot of people do this strategy, just simple this strategy. They go into the marketplace and on a stock that is kind of floundering around, right, just like at a certain price. Let's say a stock's at $14. Whoa. Okay, a stock's at $14. Goes up to 15 and 16 once in a while, and it's just kind of sitting in that range right there. You just go in on this stock and you buy a call at $15 and you buy a put. Buy a call and you buy a put at $15. Now, I've done this a couple times. It's not one of my favorites because you just kind of, because it costs money. I'm into making money, not into spending money. All right? So how do you make money in this case here? If the stock goes up to $17 or $18, do you make money here? So your premium, okay, now watch. If the stock goes flying up here, the call, whatever you pay, let's say that you buy a call on this for $1, and by the way, you buy a put on it for $1, right? So in this case, it'd be $1,000 on each one of these. So you spend $2,000. Now, if the stock really fluctuates between, say, 12 and 13 and up to 14 or 15, if the stock goes up to what, $18 a share, let's do this one here. If it goes to $18, did you make some nice money, right? So you make $3,000 or $4,000 and you lost $1,000, right? If the stock goes down, you lose the $1,000 here, but if the stock goes down to $12 a share, right, does this put become more valuable? And so you make, let's say, $3,000, $4,000 here. So whether the stock goes up or down, you win. The only thing that can happen with this strategy, and it's just called buy a call, buy a put strategy, the only thing that can happen is the stock stays the same, right? If the stock just flounders at $15, 14 and 7/8, right, 15 and 1/8, what happens, everyone? You lose both of your premiums, right? So you lose $2,000, right? But if you've got a volatile stock, you can just buy a call and buy a put on the same stock, and you're going to make money one way or the other, right? It's hard to lose if you've got a volatile stock. Okay, so that's another strategy. Well, that's the whole point here, is that you would, you're saying to sell this one? If the stock goes up? Yeah, maybe. That's happened. I've never done that. I've heard of other people doing that. But it would really have to be volatile to do that. You know, where you sell the call, then have it go so far down, right, you know, that you could sell the put. It'd really have to be a volatile stock. Okay, I want you to go back to page 29, or find page 29. We're going to talk about Amdol here, all right? And then if you'll turn over to page 30, you'll see my actual confirmation slips on what I did on this stock. So this is back in April, and I bought the stock. By the way, where was Amdol today? I still like this company, by the way. I think this is an incredibly great company, and I don't mind owning this company. I like this company. All right. So I bought the stock at 11.25, and then what did I sell? Look at the second confirmation slip down. What did I sell? I sold the pretty long term, right? This is clear back in April. I sold a November call for 1.16. So I generated some cash in the account, got a fairly nice return, but I have to hold on to it for 5 or 6 months. Here's another strat. I did this, everyone, because I was trying to do up a married type call and put thing on the same stock. But forget about this. Forget about Amdol just for a second. What I want you to see down at the bottom there is I sold a put. All right, now what the heck is this? Because this is the next strategy we need to talk about, is selling a put. Okay, by the way, why do you sell anything? To make money, to develop cash flow, right? So you sell stuff to develop cash flow. Okay, now let's think about this. One of the plays in the options market is that if a stock's at $13, $14 a share, one of the plays is to gamble on it going to 15 or above. And you call up your stockbroker and you say, what is a call option on this? If the stock goes to $17, $18, and let's say that you paid $1 for the option, then you can make some nice money. But does it cost you money? Do 10 contracts, how much money? 1,000 shares, how much money, everyone? $1,000, right? So it costs you, so you have out of your pocket $1,000. And you're gambling on what? The stock goes up, all right? Let's try another strategy. Let's say that you really think that the stock is going to go up to $16, $17. I mean, the company's doing really, really well, and you think it's going to keep going. Then instead of buying a call up here, let's sell a put. Sell a put at $15. Now, what the heck is this? Because I think you can, you know, most of us in our brains can handle buying a put, right? We understand that that's right to sell some of the stock. What is selling a put? Writing a put or selling a put. You are now selling to someone else out there the right to sell you the stock at $15. Right? You've sold a put. Remember, a put is the right to sell. So by selling a put, you are selling to someone who you don't know. You're selling to someone the right to sell you the stock at $15. What do you think, everyone? You like it or not? I like it. I'm doing a lot of these. I like them. Why? Because what do you generate? Now, a lot of you cannot do this in your accounts yet. Right? You cannot do this. They will not allow you to sell puts, right? Because are you going to have to have a lot of cash in your account to back this up? What do you think, everyone? Because the point is, can you get sold the stock? Okay, now a couple rules about selling puts. By the way, does everybody understand the selling puts? Let me do it again. Selling a put is giving someone the right to sell you the stock at 15. By the way, when you sell something, remember an option is a right, not the obligation. But hold it. Now that you've sold an option, does it become an obligation? Yes. And you have to buy this stock at $15 if it gets put to you. What if the stock stays at $14? Are you going to get it put to you? No. If the stock goes on up, right? $16, $17. So what happens to the value of your option when you sell a put for $1? So here's the point. You generated $1,000 cash if the put is $1. That's a big if, but if it is, you generated $1,000 into your account. Have you bought the stock? No. By the way, here's the rules now that go with this. Don't ever sell a put unless you are willing to own the stock. Y'all catch that? Because you may get it put to you. And you not only, okay, rule number 2, don't ever sell the stock unless you are willing to own the stock at that price. So you better be happy with buying this stock at $15. And by the way, are you? Because what was this company? What did you like about this company? You like it. You think it's going to take off, right? You think it's going to fly. So, and by the way, should you get a put that's out there 3, 4, 5, 6 months, right, if you can, and give the stock a chance to go on up. All right, and the reason we're doing this, once again, is to generate cash flow, right? So we now have $1,000 in our account. So what could happen? What's the negative that could happen here? It's not really that negative because you want this stock. This is a stock that you want to own.
Yeah, they can cash in and then you can own the stock.
Not just cash in, they can sell it to you.
So, I mean, sell it.
Somebody can sell you the stock at 15. Were you happy, by the way, to buy it at 15? You better be, or you shouldn't have done this, right? And why are we doing this? By the way, you know what? I wish I could just spend a whole day on selling a put, and I would, except for this. And by the way, I've talked to a lot of people that have, you know, $500,000 and $1 million in their accounts, and a lot of people, this is all they do all day long is sell puts. A lot of cash to back it up, right, in case they have to buy the stocks, right? But they just sit there and sell puts all day long. By the way, what's your rate of return? You didn't buy the stock, everyone. You just got $1,000 into your account. What's your rate of return? It's infinite again. You can't divide by 0. You just keep selling a put, selling a put. The negative is, and that's really not a negative, is that a lot of you will not be able to do this. Not until you have more cash in your account. Your stockbrokers won't allow you to do this until you have a little bit more experience. It's an incredible strategy. It's called sell a put. You sell a put on a stock that you want to own anyway. I sell a lot of them now. Yeah. By the way, for example, you know, I don't talk about it here in class because a lot of you can't do it. And I'm not going to have you fly from all over the country, pay me the kind of money you paid me to be here, and to teach you a strategy that 99% of you can't go home and do. Right? Does that make sense? It doesn't make sense for me to teach that kind of stuff, right? So I'm teaching strategies that you can do so simple in your IRA. Well, you can't do this in an IRA, you know. You can't do it. So, you can't. Because, see, you have to have the cash, right? Because what's the broker going to make sure? If you've given someone the right to sell you the stock at $15 and you've just given the right to sell you 1,000 shares, what do you have to have in your account? $7,500 at least, right? If you're doing it on margin. So you have to have at least $7,500, and they basically put a hold on that money, right? There's a hold on that money until what date? Until the expiration date, until the option expires, right? What's that? Yeah, you want to go out, well, yeah, you want to go out quite a ways. The problem is on these puts, on selling a put, is the further out you go, the less money you get. On a calls, the more money you get. On puts, the less money you get. So you probably want them on this example here. If the stock's at $13 and $14 and you think it's going to go to 16 or 17 in the next month or two, then you'd sell the put. And again, everyone, I tell you, I know some people that are making lots of money. I mean, like 60, 70, 80,000 bucks a month just sitting there selling puts. You know, like with $500,000 in their account. That's all they do is sell puts because they got the cash to back it up. They just have all the cash just sitting there to back it up, and they really don't own any stocks. They just have the cash sitting there as a way of backing up all their put sales. To sell a put. Yeah, I've done it on a couple of them. I'm going to do a lot more of it. Right, a lot more of it. Let me tell you the problem, everyone. I have in my accounts, kids, listen to what I just said a minute ago. These guys that are doing this full time, that are just selling puts, they just leave the cash in their accounts and they don't own any stocks. I have all the cash in my accounts tied up in stocks. I don't have that much cash available, right? So every time I call them and say, okay, I want to sell a put, he says, okay, wait, now you understand that that's going to put $7,500 on hold in your account, right? And so the strategy is, well, do I use that $7,500 to buy the stock, right, and do the covered call, so you can't double dip the money, right? The broker is going to see if you spend it on stocks, then you can't use it for selling puts. Because there has to be cash in your account to back up this part of it. That's right. You have to have, if you're on a margin account, you have to have the margin part of the, because what's the stockbroker's risk, everyone? If you get the stock put to you, what might happen? If you don't have the money, what's happening, everyone? Be in a world of hurt here. So the stockbroker is going to make you put on hold that amount of money to cover the sale, or the purchase in this case, in case you get it put to you. If the stock goes down, by the way, is that what you kind of want? Well, you don't want that to happen, right? If the stock goes down, right, stock goes down to $13 or $14, you will get it put to you at 15. So in this example, you only sell puts when you think the stock is going up. The risky side of this, if the stock goes down, right, well, you can have the stock put, well, hold it. You can have the stock's now at 13. Now it gets put to you at 15. But what were you happy with, everyone? So whether you're buying it at 13, 14, or 15, do you still like this company at $15 or not? You should have liked this company at 15. So even if you get it put to you at 15 and the stock's currently at 13, so be it. Now you have to wait for the stock to come back up, do some covered calls on that now that you own the stock or whatever, okay? If it goes up, all you're going to do is to sell your put, right? You're going to sell out of your put at some point in time. It's just like buying a call. When the stock goes up on a call, you sell your call at a profit. When the stock goes up on selling a put, you sell the put at a profit. You do get put to stock. That's right.
You know, you're buying it at 15.
That's right.
It's like you bought it a week ago at 15.
That's exactly right.
So you like this especially on split stock?
The only ones I'm doing it on is a couple of the split stocks, only because I'm gambling on stocks going up. Therefore, I just want to do it on stocks that are going to go up. All right. Okay, we're going to take a break and come back and talk about rolling stock and rolling options. When I first started investing in the stock market, I didn't make very much money at all. But then I learned an idea that I implemented over and over again, which is called rolling stocks. You see, there are a lot of cheap little stocks out there that roll between a certain range, say $1 up to $2 or $3 to $4, then go back down to 3. So you buy it at 3, you sell it at 4. You can learn all about it here. It's called rolling stock, and it's a way of making money and getting cash flow built up on a repetitive basis. Now, another thing that we're going to talk about in this section, you see, while I was teaching these seminars all around the country, a lot of my students said, why don't you do options on rolling stock? We'll call it rolling options. So I'm going to show you a way of doing that, how to leverage or proxy your money into rolling stocks and really show you how to accelerate your profits. So let's get back to the seminar. This section is going to be about rolling stocks and rolling options, and it's going to get kind of wild here because this is one of my favorites and one of my time-honored secrets to investing in the stock market. And yet there are a couple things that happen. Will, can we, are we going to get the stockbroker on the phone? Let's get him on the phone. I want you to see one that just came up. And that, by the way, again, this is what happens all the time at these Wall Street workshops. And even those of you watching at home, remember that you have an invitation to come. Call our office and find out about this. Will you do another thing for me, too? Will, when you get a minute? Would you get ready to log on to Win? Okay. They keep happening. Every time I take a break, people are calling their stockbrokers, you know, deals just keep coming up. And you all said that you wanted it real and you wanted it live, right? Well, here it goes. We got another one. Ticker symbol AKSEF. AKSEF. Now, I want to, okay, he's got the premiums. We'll check, as soon as we get our stockbroker on the phone, we'll check and see the current prices. What's the name of the company? Arrakis Energy. AKSEF. Now, when you have that many ticker symbols, by the way, 5, that definitely means it's, you know, like NASDAQ or, you know, bulletin board or something like that. All right. The stock is at what? What is the stock? What was the current price?
16 and a quarter.
16 by 16 and a quarter. Is this it, Will? Is this the chart on it? Well, I don't like it now. Because there's 16 right there. You know? For buying a put, maybe, I don't know. If it continues to go up like this to 30, 40 bucks a share, yeah. But my goodness, I don't particularly like to buy stocks at their peaks. I passed up on some that I've lost out on money, but I passed up a lot of them that have gone back down. But here's the point. This one here, watch this, everyone, has a July 1750 call. And what is the bid and ask on that?
1 and 13/16 by 2.
What do you think, everyone? Now, does it get exciting to anybody here? Very exciting to me. So what's a high? Well, probably right there. I'll bet it's at $3 and $17 high and low by looking at the chart for the last year. Right? Are there? Did you check on any $20 calls?
$20 is 1 and an eighth by 1 and a quarter.
My goodness.
That's on Chicago.
But it's 1 and an eighth by 1 and a quarter. You like this one, everyone? Let's do the numbers on this one right here. Okay? Let's say we buy the stock at 16 and an eighth. Are you all with me? We're going to buy the stock at 16 and we're going to get it in the spread. If we paid 16 and, oh, let's do 16 and a quarter. Heck, let's get it at the full price. By the 16 and a quarter, just get this one, right? It's at 16 and a quarter. It's $16,250. Divide by 2 is 8,125 bucks. Now, though, we turn around and sell the call for what? You want to go ahead and sell it to 1 and 13/16, or what do you want to do? Okay. Well, how much is 1 and 13/16? It's like $1.81. So in this case here, then we would get $1.81 or $1,812. Let's round off, 812. Okay, what's the rate of return? This is a nice one, everyone. Randy, are you there?
Yes, I am. Wait.
Hey, check out AKSEF. Adam, Knowledge, Sam, Edward, Frank.
Okay. I've got it here at 16 and 3/8 and 16 and 5/8. It's up a half for the day.
See, it's already up, everyone. 16 and 3/8. All right. I guess we're operating with a couple of hour-old bids and asks, Randy. But the July 1750s, what are they right now?
2 and 1/16 and 2 and 1/8.
Look at that, everyone. Do you see it?
That news is jumping like that?
Okay, you're paying about 25 cents more for the stock, but you're getting quite a bit more for the option, too. Right? Do you know anything about this company, Randy? Have you ever heard of it?
I've seen it as far as because I've been getting quotes and I've looked at the news and stuff like that, but I don't know a lot about it.
All right. Well, let's. I've got the numbers up here on my screen right now for the numbers that was about 2 hours ago, which were 1 3/16, 13/16 bid by 2. So we got, okay, so let's just finish it so we get back to Randy here. We bought the stock for $16,250, divide by 2 is $8,125. We pick up a premium for July of $1,812. Divide that by the 8, so what's our rate of return? 22.3%? Not bad. Now, what if we get called out? We buy the stock at 16, we bought it in our example, Randy, at 16 and a quarter. So we buy the stock at 16 and a quarter, we get called out at what price? $17.50, so what are we picking up? Another $1.25 times 1,000, another $1,250. Now what's our rate of return? That's $3,062 divided by 8,125. Now what's our rate of return? By the way, I want you all to do something for me. I want you to write these numbers down, real live, in-class numbers, and anytime your stockbroker says you can't do it, show them this one, right? What's the annualized return on this? 37.6%. What do you think, everyone? 452% return. And there's still going to be a lot of non-believers out there, but you'll show them number after number, stock after stock, and they'll say, you can't do that. Well, I just did. You know, don't tell me I can't do something that's past tense, right?
20.
I don't know. Wait, are the 20s okay too? Want to do that one? All right. The 20. Let's get the current prices on the 20s. Randy, do you have the 20s on this one?
I do. The 20s are coming in at 1 1/4 at 1 7/16.
Okay, and the stock is currently at 16 3/8, right? All right, so
That's correct.
we have to run some new numbers for everyone if we're going to use the new numbers. All right. So we got this. Okay, watch. Let's see. So now you're writing a July $20 call. All right. Now you get a premium of how much? What did he just say they were?
1 1/4, 1 7/16.
$1.25 by 1 7/16. So what do you want to get them for? Oops, 7/16. What do you want to get them for? Sell them for. So let's buy the stock at $16,375, and let's get them at 1 3. Let's try to sell it for 1 3/8. Right? You do it between the bid and the ask. Okay. So that'd be $1,375. So now, what is this? Let's take this. Let's take it to $16,400. Let's go $8,200 is the cash out of our pocket. $8,200, and divide $1,375 by $8,200, and what do you get? So far, it doesn't look as good as the other one, but watch. How much? 16.7%. Not bad, right? Not great, but not bad. The other one was what? 22.3. So you're giving up 5-6 percentage points right now, but now you get called out at what? You get called out at 20 instead of at 17.50. So if you do get called, I'm not saying you should do it, and that's a judgment call on your part, right? But if you get called out at $20, what do you make? How much? You make $3 per share, which is $3,625. So now you take the $1,375 plus the $3,625, 5,000, and divide that by 8,200. Now what's your rate of return? How much? 60.9% instead of 37.6. Annualized return is 720%. But what? If you get called out, what does the chart tell you, everyone? What's the high for the year, did you say? 19. So what do you think, everyone? Okay, I'm with Marianne on this one. I don't...
Approval for a new 20-inch pipeline, which they're going to be putting in, should be done by the end of '97 or something.
Okay, but maybe that news has already played out for a couple of days, right? You don't know. On this one here, what do you think, everyone? Okay, here's some other news. I just got some news on AKSEF. Last month they had a major oil find in the Far East. Real soon now, this week, they're going to be announcing a deal with the Republic of Sudan to develop the field. And the price run-up probably reflects all these news and rumors about what's going on.
Take the 1750.
So what do you think, everyone? Because I'm going to take a vote on this one. How many take the 1750s on this one? How many take the 20s? You still got some guys going for the 20s. You got some risk takers, not risk takers, but kind of like optimists. Gamblers on the optimism scale, right? Okay. Yes.
Wait, could you just basically give us a small little definition of what it is that you look in a company? I mean, what are some of the basic things? I mean, you have all these strategies and all these things that are wonderful, but if you don't get the right company,
That's right.
It could go against you.
You're looking for volatility, a little bit. not a lot, a little bit. You know, so you keep buying them out, keep buying the stock on the dips, so you can sell them on the strengths. I like companies that are profitable, obviously. By the way, I like companies that are really big into newsy type things. What drives volatility, by the way? News. So I like companies that are into this kind of stuff, getting new contracts, competing with AT&T and winning, you know. By the way, that IDC is that way. IDC every 3 or 4 days comes out with a new $38 million contract, $19 million contract. They've developed everyone, IDC. I got to tell you, I'll tell you a quick story. Now, whether you should buy this company or not, I don't know, but I like it. For me, it's a perfect little company because I like this kind of company. We have one of our students that's been a student for several years that's a major Boeing engineer, and this guy like has 19 patents that he's filed with Boeing. He's into all the, you know, the AWAC planes that they have, the air to ground, and all this, what do you call them, the radio waves and all that stuff that you know, whatever. They fly him all over, checking out patents and checking out discoveries and all that all over the world. In this company's called Interdigital Communication, right? Hey, Randy, has anything happened with IDC today?
As far as the stock,
Yeah, 7 3/8 still.
7 9/16 to 7 5/8.
Okay, now it's up over 7.5. I'm telling you guys, this company, I got up to 11 and 12, and I was selling covered calls at 10, 12.50, and all around there. And then it had a lawsuit going against Motorola, and everybody thought that they were going to win about 2-3 months ago, and it lost the lawsuit. It lost a $300 million lawsuit. It actually didn't lose $300 million. It just didn't get $300 million, right? And when they thought that they were going to get that $300 million, the stock was going to 11 or 12 bucks a share. But clear back down to $5 and $6 and it's already back up to almost $8, right? This company in Japan, they have what they call these little handy phones. Now, y'all know that we have cellular technology, right? We're driving in our cars and we go through a bunch of different cells. Y'all know that the wave of the future is this LEO system. Everybody know what's going on up there right now? Microsoft, McCall, there's a whole bunch of people putting these satellite orbits into space, right? And there's going to be all these geosynchronous satellites called LEO. It stands for low something orbiting whatever satellite. They're LEOs, so what they're called. And pretty soon you're going to be able to just take a phone. They'll have attachments on buildings and all kinds, and just talk on the phone anywhere. You'll be out in the middle of the desert and be able to talk on a phone, right? And that's all happening right now. They really need that in Japan because in the Tokyo and the big cities like Osaka and Tokyo, they got all these buildings and cellular phones don't work very well. If you've ever been in a city, you know what I'm talking about. You can go downtown Seattle and your cellular phones don't work very well. But over in Japan now, they've got this, IDC has this technology, and they own the marketing rights to all of Japan for this thing. And it is just going to be unbelievably profitable, right? Yeah, it's an American company over there. And by the way, they're like headquartered in Pittsburgh or Philadelphia or something. And this guy that's one of our students has gone back to their headquarters, been over to Japan, seen all the technology, seen all this kind of stuff. And he's this Boeing engineer that gets to license all the stuff for Boeing use and all that. This guy is totally blown away by this company. I mean, he really likes it, and I like it too, right? So now I've been doing covered calls on this thing a lot. I own, I think, about 13,000 shares right now, and I just keep buying more and more and more because I think it could possibly be a $20, $30 stock. Okay? IDC, Interdigital Communications. I just like the company. There it is. Okay, you see this big plunge right here about a couple months ago. This big plunge from $12 clear down to $5. Well, it even got down to 4 for a while. I didn't know it got down to 4. But I started buying again at 5 1/8. I started buying a whole bunch of 5 1/2. Got a bunch of my wife's IRA at 5 1/2. I like this company. This is a neat little company. All right, Randy?
Yes.
Okay, does anybody else have, we're going to move on now, but does anybody have any more? We're going to do rolling stocks right now, so if you could just give me some quick prices on a bunch of them.
Okay.
I'll just go down through a list, okay? So, and by the way, you may want to put these, I'm talking to the class now, Randy.
Okay,
you may want to put these on page 37. See where it says name of the company, and then it says symbol. So I'll just get the symbol, right? And then you see the far right-hand column? You all see where I'm pointing? So you got the symbol here, and then when I ask him the current price, it'll put it over here on the far right-hand column where it says currently at about this price, right? Because it changes again from day to day. All right, well, let's okay, we'll what's that? Oh, no, we'll do that in just a minute. I'll give you the ranges when we get Randy off the phone. I'm just going to have him give us the prices right now. Okay, PMDX.
15.5 at 21.8.
By the way, that's 15 cents, by the way. Right, Randy?
That is correct.
15 cents by
21.8.
21?
Or say 22 cents.
22 cents.
Mm-hmm.
Okay, AQS.
2 at 2 1/8.
Oops, an 8. Okay, MGR.
15/16 at 15/16, cross market.
That doesn't happen very often, everyone. where the bid and the ask are the same. That'll change in a couple minutes, possibly. All right, RYO.
3 1/8 at 3 3/16.
Okay, CPX.
2 1/4, 2 3/8.
Oh, good. Okay, AU.
5 3/4, 5 7/8.
Wow. Okay, good. Okay, CIDN. This one's not rolling anymore. It's just going on.
CY.
What's that?
What was that again? CY.
CIDN. Computer Identics.
I've got 1 15/16 to 2.
Whoa. We need a chart on this one. It's gone back down. My
Down
goodness.
9 cents.
This may be one. What is it? 1 and what?
1 15/16 to 2. Down 9 cents.
Man, oh man, oh man. Good deal. I mean, well, bad deal for the company, but good deal because I've been rolling this one a lot, and it's gone up to $3 a share and never came back down for a long time. Okay, how about, I got to show you one. I'm just going to give you a price. I got to show you one of my favorite rolling stocks for last year. Has been a company called Autoimmune. The ticker symbol is AIMM. This is one we are rolling between $5 and $6 a share. Listen to the price now. What is the price on AIMM?
10 3/4, 10 7/8.
Okay, so it's way out. It's taken off. Okay. Well, a couple of our old favorites that have just got hammered recently. LA Gear, ticker symbol LA. It's way down.
2 3/8, 2 1/2.
My goodness. All right, how about SMTS? This is another one of my favorites.
SNTS.
No, SM. Sam, Mary, Taylor, Sam.
I've got 1 3/4 at 1 13/16.
Oh, my goodness. Okay, a couple more. THRX, Theragenics.
I must miss that.
Tom, Henry, Ralph, X-ray.
Oh, okay. That's 6 at 6 1/4.
My goodness. Okay, TXCO. This one's called the Exploration Company.
2 1/2, 2 5/8.
There we go. Okay, good deal. Okay. Okay, Will, can you help me out? Is there any more that we want to check? Yeah, Cineplex Odeon, CPX. And we did that one. We did that one. Oh, what's that? Yeah, that's not a rolling anymore. Try LMNT. Okay. While we got him on the phone, let's do some. These are not rolling stocks. So we just draw a line. These are what we call bottom fishing stocks. When I say bottom, I mean scourge of the earth type stocks. Okay. Yeah. Okay. Do you have TBY? Put that back up for a quick second. TBY. That's
4
TCB.
5/8 and 4 7/8.
Okay, that's TCBY, the yogurt company, but it's TBY. TBY. There we go. Okay, now, okay, it's just some cheap little bottom fishing stocks. I'll just get some prices and we'll talk about these later. Lamont, LMNTQ. By the way, what does a Q mean? Remember, I mentioned this yesterday. It means it's probably in bankruptcy. They changed the ticker. Well, it's in bankruptcy. They change, unless they have a Q in their name. On these types of stocks, they change the ticker symbol when they go into bankruptcy. You have the price on that one?
Let me. What is it? Mary, November, or what's the two middle symbols?
Mary November.
Okay. I show a last trade of 5/16 back in May 17th.
Everyone, this is not trading right now. This stock is by appointment only to get any of this stock. It's in bankruptcy. This is an apparel store here in the Northwest. Okay, how about SPCLQ?
That's S as in Sam.
Yeah. Spectrum Technologies.
That's SP.
C, Charlie,
Q, right?
Lima, Q, yeah.
Okay. 15 1/2 at 19 cents.
15.5 cents by 19 cents.
Right.
Okay, how about MGIKQ? I'll tell you about this company later, if it's trading at all.
That's NGI.
No, M. Mary,
Oh, okay.
Mary, Good, Indio, King, Queen.
I show the last trade being on the 26th at 3 cents.
Yeah, okay. Okay, how about LES?
13:30 seconds. Last trade on the 19th.
Okay, how about this? This is another rolling stock one. I'm going to put it over here. How about CAND?
1 7/8 at $2.
Okay, just for fun, OXIS.
3 1/8, 3 3/8.
Dang it. Got out too early. I was rolling this one between 2.5 and 3.5 and 2.5 and 3.5, and I bought it at 2.5 and went down to 2 1/4, and it sat there for so long that when it got back up to 2.5, I sold it all. I didn't think it was going to roll anymore. That was like 4 weeks ago. I sold everything at 2.5. What's that? Yeah. LMTS? What is LMTS? Laser Master Technologies.
That's 5 5/8 at 5 7/8.
Hey, is this one optionable? Okay.
No,
All right.
it's correct.
Okay. All right. Okay, Randy, thanks.
You bet.
Talk to you later.
Bye-bye.
Okay, we'll talk about those later. Let's go back to now the definition, back over a page, and then we'll talk about those companies, and I'll give you my current price and what I'm doing with them. The whole idea behind rolling stocks is just to generate income. That's all it's for. Generate income, generate income. You buy a stock, you sell a stock at a little bit higher price. You're not gambling on the stock going from $2 to $20. You've just got a stock that you watch for a while, and it goes from $2 to $3, back down to 2, up to 3, and back down. You get familiar with these companies. You get to know them. So the definition, to define a rolling stock, well, heavens, if you open up a stock market dictionary, and look up the word rolling stock, it'll say livestock transported on the railway systems of America. Seriously, that's our definition of rolling stock, right? My definition of rolling stock is a stock that trades consistently between a certain range, high and low. $1, $2, $1, $2. Just keep going back and forth between $1 and $2. Now, I've got some that have lasted several years, but everyone, they usually last about 4, 5, 6, 7 months. You got to latch onto them. You watch them for a while, 1 or 2 or 3 months. You watch them roll. There are some that have rolled a lot. Well, I don't know if we RYO and AU would be really good ones to show, but lately they've been down. All gold stocks have been down, right? Now, we're doing this for cash flow. Let's go through the listing on page 35. We're doing this for cash flow. Now, there are 2 rules that make all of this possible. Okay, rule number 1 is this. Always know your exit before you ever go in the entrance. You always know your exit. Well, I am so into this, knowing your exit. I learned this in real estate. Don't ever buy a house unless you know the purchase price you're going to sell it for, exactly how you're going to sell it, when you're going to sell it. Always know how to get out of something before you ever get involved in something. So know your exit. By the way, I carry it down right now. I go to a lot of movies. I walk into a movie house, I'm always looking for the exits. If something goes wrong, right, I want to know how to get out of there, right? So I'm always looking for the exits. All right. Rule number 2 is that you don't get greedy. You just do not get greedy. All right. Now, I want to show you one. Let me make sure it's still in the manual here. All right. I want to show you one, everyone. Last fall, we were doing up a Wealth Academy, Combination Wealth Academy, old Wall Street workshop at that point in time. And there was a young man sitting there who was about 28 years old, was going to college. His name is Charlie, and he was sitting in class, and he was kind of right here the first day, so back over there the second day. And he'd come to the class he'd come to my all-day seminar and learned about the class about 5, 6 weeks before. And I was doing this company called Autoimmune. And I was buying this stock at $5, and it'd go up to 6 and back down to 5, you know, and I was doing it quite a bit. And then the stock dropped back down last October, dropped down to $4.75. I said, wow, man, instead of buying at 5, 5 1/4, I'm going to buy this thing at $4.75, and I'm going to make a lot of money. This is going to be a great deal. I'm going to make a lot of money. So I'm going to make $1.25, you know, when the stock gets back up to 6. And I was sitting in class telling the whole class about this stock, you know, and I was waiting for it to do that. I had been waiting for like 5 or 6 weeks for it to roll back up. And he raised his hand, and he goes, Wade, I've done this now. You know, I've rolled this stock 5 times in the last 6, 7 weeks. He said, you couldn't have. Now here I am, the teacher, telling the student that he can't do it. Like, idiot, I think I would learn my lesson by now, because my whole life people tell me I can't do stuff, right? And I keep doing it anyway. I said, you couldn't have done that. You couldn't have done that. There's no way, because it didn't hit $6. He goes, well, I've been buying it at 475 and 460 range and been selling it at 5 1/4. You know, I've been making $1, but I'm making like 60 cents a share, and I've done it 5 times. And he looked at me and says, don't get greedy. Now, I want you to go look at chart number 4. Look at chart number 4 on page 36, and go back. Let me tell you the dates of this. He came to my all-day seminar the end of October, and then he was actually coming to the course the first week of December. Look at the stock, everyone. Does it prove out exactly what I just said? He was buying this stock at 475. Y'all see the 475 range? So back in the end, well, actually in September, he didn't even come to the class until October. So he bought it, sold it, bought it, sold it. Now, I don't think he did it 5 times. He told me 5, but I only think he did it 4, if you count the dips like that. And there may have been an intraday thing like that, I don't know, that may have not showed up on it. Is that still okay, by the way? By the way, he had like I got to tell you what he had. He had $6,000 cash, and he made $3,800 with it for that 5 or 6 weeks. Pretty good deal on $6,000? Then he said, hey, I've learned now by doing this rolling stock, I don't have to go back, I don't have to go get a job. I'll just go back to college and get a master's degree. So he did. He said, I'll just become a student for the rest of my life. I'm making this much money being a student. I really like college. I'll just stay in college. Sound interesting, everyone? Kind of interesting way to live your life. Just go to school. You know, just learn. All right? All right, now, let's talk about a couple more things. I do like bankrupt companies that are in Chapter 11 reorganization, and there's a couple reasons that I like them. Let me give you those to you, but you also have to be very, very careful here. Okay, point, I do not like companies when they first go into bankruptcy, and I really don't like them when they're right coming out of bankruptcy. They just got too weird. The judges do too many weird things. But when they're in bankruptcy, why do I like them? I mean, think this out. Yeah, because I'm going to put that as number 2. Number 1 reason why I like bankrupt companies is because they're not going to go into bankruptcy. Now, what do you think?
Right.
They were $13 a share and they're down to $1, right? They're $60 a share, they're down to $3. Now, by the way, the famous last words are, well, it can't go much lower than this, right? So you're sitting there, so you buy the stock at $1 and it goes down to 50 cents. So, well, it can't go much lower than this, so you buy some more and it goes down to $0.25. It can't go much lower than this and it goes down to 10 cents. There's no way it's going to go down more than 10 cents, and it goes down to a penny a share. Well, I'm going to start buying it now at a penny. It cannot go much lower than a penny a share. And you call the next day and you say, what is the bid in the ask? And he says, it's 1/10 of a penny bid by 1/2 of a penny ask. By the way, that can happen. You know, so the famous last words are, it can't go much lower, and they sometimes do. The point, though, is this, that usually they've taken their hit. They've gone from 13 down to 1. And if it bottoms out at 1 and just kind of starts going like this on the chart at $1, not for sure, but you can be relatively certain that it's not going to go much lower unless something really strange happens, right? So I like them because they're already in bankruptcy. Number 2, you said it over there, they're volatile. What causes volatility in these little companies? They're news-driven. Y'all catch that? They're news-driven companies. For example, when America West Airlines was in bankruptcy, they're going to get a bunch of new planes from this company in England. Boom, the stock goes up. They don't give them all the planes, they only give them 3. The stock goes down. The Ansett Airlines in Australia is going to put in $30 million. Boom, the stock goes up. They decide not to put it in, the stock goes down. Judge is going to give an extension on their bankruptcy filing. Da-da-da-da-da-da-da-da. The stock goes up. Boom, it goes back down in a couple of days. Did you see that? News-driven. By the way, can that happen a lot? Especially if you live in a hometown where the company's located. All right, so they're news-driven companies. And I like that part of it. All right. I really liked, for many months now, this AmeriQuest Technologies, but the stock has gone really down right now. So I'm kind of putting a hold on buying it. See, remember that? Did you catch those prices? On AQS. So if you want to go through your chart now on page, you got the chart there on page 35, but your whole list of stocks on page 37. This is one, everyone, that I've been rolling between about 275 and 3 1/4. And where's the stock right now? 2 1/4. So it's way under where I've been rolling it, right? So I don't know if I'm going to buy it or not. I think I'm going to wait a while on this one to see if it bottoms out. All right? Well, if you're going to get wind ready, okay? Let's just go through the whole list here, right? Merry-Go-Round is a company out of Baltimore. At the current price, at the time of this taping, they are in bankruptcy. They're getting ready to come out later this summer. They were supposed to come out on June 30th, but about a month ago they filed for an extension. Now, this is one that I was rolling between $1 and $2, $1 and $2. I did it twice already this year, between $1 and $1 7/8. I got a little, by the way, when I did that one, I got a whole bunch of it at 75 cents, and then I sold it at 1 7/8. So I made a little over $1 on this one. It was a nice deal. Okay, by the way, I'm sorry, I got to make myself a note here. So anyway, it's down now because they did the extension on the bankruptcy filing, right? Is that negative news or positive news? No, it's kind of negative in a way. right? Because they want it to go out, right? They want it to come out of bankruptcy and get, going again, right? Well, it's still in bankruptcy and they get an extension. That means that they really haven't done what? They haven't lined up all their creditors. They haven't made the deal yet, right? So, see the point? So it was like negative news, and the stock went down under $1. I'm not going to buy any more of this one, of merry-go-round, because I think right now I own 23,000 shares of it, or 24,000 shares. I got enough, right? Whether you should or not, I don't know. That's up to you. It's not, because it's New York. It's New York Stock Exchange. All the other ones were the NASDAQs. They get the Qs on NASDAQ, okay? No, this is no, this is not a penny stock by that technical definition because it's on a major exchange. But is it a low-cost stock? Definitely, And the street definition of a penny stock, it would still fit, right? Because anything under $5. All right, RYO is Royal Oak Mine. This is a gold mining company. It's a Canadian company. I really like this company, by the way. They come out with good news all the time. This one, if you look at a chart over the last couple of years, was rolling between $4 and $6, $4 and $6. But by the way, any of you follow gold stocks or even the price of gold? What's happened to gold the last year and a half? Way down. About Christmas time of last year, the last fall, you could look at all. Remember I showed you those Mexican stocks yesterday? You could take every stock in gold and about do the same thing. Last November and December, this took all a plunge. Dollar here, dollar there, they took a big plunge. All right, so this one, I've been buying it recently at about 2 7/8, and then selling it about 3 1/2. Right, so about 2 3/4, 2 1/2. If it goes down to 3 1/4, 2 3/4, I'll buy a whole bunch more of it. Okay, now again, for those of you watching at home, these are current prices as of the summer of '95. Do not rely on these prices because everything's going to change by the time you watch this video. Okay, the next one is Cineplex Odeon. Early in 1995, this is a theater chain company. It's another Canadian company, by the way. Early in 1995, they made an announcement they were going to take over another firm called Cinemark, right, 900 screens, and the stock went sideways. Now, let me tell you why, and this is something good to learn. Usually, when a company takes over another company, it does so with debt, right? It sells off bonds or whatever, and it raises money, but it incurs debt. So when there's a takeover of a company from one company to another, is there a tendency for the stock to go up or down? What do you think? A lot of times down because the debt. All the investors are afraid of the debt that the company incurs. This takeover of Cineplex Odeon of Cinemark, and by the way, they were going to call the new company something like Cineplex International. It didn't go through, by the way. But they were not going to do it with debt. They were doing it with a stock offering, right? So they were actually issuing stock to all the shareholders of the other company. Oh, by the way, so now you have another 900 screens, which would make it the largest movie chain in America, but is the stock diluted now? What do you think? With all those more millions of shares out there, the stock is diluted, and the price kind of floated from 2 1/2 down to 2. I have been rolling, it's one of my old favorites, I've been rolling this company for 5 years between 2 1/2, 3 1/2, 2 1/2, 3 1/2, 2 1/2, 3 1/2. By the way, it stayed above 3 for so long, I thought it was establishing a new roll range between $3 and $4, and then finally went down to 2 1/2. And with that merger thing, right, it just kind of floundered down to 2. And it's already back up. It's been up to 2 1/2 the last couple of days. It's been going all around 2 1/2. So, by the way, I think it got down to like 1 7/8 for a couple of days. So you could have bought this thing at 1 7/8. I bought a bunch of it at 2. I could sell it right now at 2 1/2. Well, not right now, but I could have, and made 50 cents a share on this. Is that an okay deal, by the way, for 2 or 3 weeks? So I'm gonna keep rolling this one, but right now I have all of my orders in to sell the stock at 3. Got to sell it, and I have a lot of shares of this company. Okay, yes. Yeah, you can't well, the bid and the ask here is only 12 cents difference. So when you buy it at 2, then you have to wait for the stock to get to like, well, 3. Well, then it really has to be like $3 bid, 3 1/8 ask to pick up my dollar. So I'm going to sell it at the bid.
Wait, what was the question?
What was that?
What was the question?
The question was, can you make money on the spread? Just going between the bid and the ask. Is that your question?
Well, if you say you find it at, let's say, 2, selling it at 3,
Right.
you might think, without thinking about, oh, I get $1, but usually we got to establish what we're talking about.
No, when I say I buy a stock at 2 and I sell at 3, I mean I buy it at 2. That means that the bid and the ask has got to be like 1 7/8 bid by $3 ask. So you buy it at the ask of 2, and then the stock's got to get to like $3 bid, 3 1/4 ask, and you sell it at 3. Okay.
I have this stock right now, and I've been waiting for it to roll up. And how long is long enough?
Guys, this Cineplex order is going really slow right now. I'm not getting any more of it. I'll get some more at 2. I'll get some more 1 7/8, but I'm not going to buy any at 2 1/2. It's just gone really slow. By the way, are some of these companies cyclical? Well, how about a theater chain? So now here we are in the summer. We may have to wait till the end of the summer. By the way, they came out with a Memorial Day weekend report that they were 6% higher in attendance at their theaters than they were the last year, right? Is that good news, by the way? So they may be very profitable for the summer, but we may not be able to get out of it at 3 or 3.5 until after the end of the summer, right? When they have their what? Their quarterly reports, dividend reports, or anything like that. So we may have to wait till the end of the summer. Yeah. Remember I told you there are the 3 ways of making money right now. Covered calls is my #1. Options on stock splits, and then rolling stock is my 3rd best way of making money. It used to be my best way. Well, it used to be my only way, right? And I've added to my repertoire a few other ways of doing it. All right, Amex Gold. This AU, by the way, AU is the element symbol for gold. It is also the ticker symbol for Amex, which is AMAX, Amex Gold. This one, if you look at the chart on this one, it's unbelievable. If you look at the last year or so, $6, $8, $6, $8, but this one's been down around 5, right? It even got down to 4 7/8 for a little while there. I've been buying this one at 5. I've been selling. I got my orders in to sell it at 6. If it gets up even just a little bit higher and it doesn't look like it's going to bump into 6, you know, I just may go ahead and sell it because I've got a lot of this stock. Okay, continuing down the list, just a couple more. Computer Identics. We have the screen. I think we have the chart on this one. Yeah, it's got the chart number 3. This almost is a range rider type stock, which we'll talk about range riders after lunch. But this stock was down around $1. I was buying it at $1, selling it at $1.50, right? And then go back down to $1. I sell it at $1.50. But then it kept going up. It dropped down the back a little bit, but then it kept going up and up and up and up and up. And it's gotten up over $3 a share, you know. And now, all of a sudden, bam, it's back down to under $2. So if it even drops down to 1 3/4, I'm going to buy a whole bunch of this one. I like this little company. I've been doing it for about a year now. Okay, we don't need to talk about autoimmune. It's way up to 10 3/4. That's not a rolling stock anymore. I think LA Gear, I'm going to start putting that into the bottom fishing category. It's just not rolling. It just keeps bleeding and bleeding and bleeding. Now, this is a stock that I've been rolling for a bunch of years for between $6 and $8 a share. Then it went up to $13, right, all through last spring, all through last winter, and then it just has gone down from $13, just a steady decline, all the way down to $2 now. Okay, I don't know. A lot of competition out there with Nike, right? And all the other foot, I mean, you know, when you go into that foot, is there a lot of competition? How many, you see their ads on TV? Reebok, Nike, and LA Gear. It's just another tennis shoe company, you know, and it's had a lot of problems. I've talked to a lot of people. I've had a couple of guys that were suppliers to them, and they said, man, they're not paying their bills, way behind. I mean, this company's, I don't know if it's losing money or not. I don't know. All right. Oh, PMDX. I probably should skip PMDX. Everyone, PMDX is a company that, and those of you watching at home, you should check this one and see where it is a year or two from right now. This was a company that we were rolling between 40 cents and about 75, 80 cents. Did it a bunch of times, by the way. I really like this one. This company owns like medical centers. They don't own the centers. They own the buildings that medical centers are in. Now, last week, they announced that they were going, and the stock, by the way, last week got up to 98 cents a share. And then they sold off a division, a company, part of their company called like Care America or something like that. They sold off a division, and when they did that, they sold that off, they took a 50-cent hit on NASDAQ rules. You know, when they sell off the assets, they take a big hit, and bam, all of a sudden the stock was down in the 40s again. Well, with such a big drop, everybody else started unloading it. Whoa, I better get out of this thing at 40 cents before it goes on down. And it got as low a couple days ago as 6 cents a share. Yeah, 6 cents a share. I wish I would have bought a whole bunch of it at 6 cents, right? Because it's already back up to now. Now, by the way, when it was at 6 cents, it was like 6 cents bid, 28 cents ask. Is that a big spread, by the way? Like a 4 times plus spread, you know. And now it's, you know, the bid and the ask is, it's not still that tight. Is that still a pretty big spread? Between 15 cents and 22 cents? Okay. So you're not going to buy this one at 22 and sell it right away. You got to wait for it to go back up to 30 or 40 cents. All right. So I don't know. By the way, I'm not telling you to invest in this one, but let's say you got it at, say, 18 cents a share. How much would $1,000 buy? How much? About almost 5,000 shares, right? Right, $1,000 at 20 cents a share would buy you, you know, 5,000 shares. See the point? So you can pick up, you know, right around 5,000 shares of this thing with $1,000. Now, don't do this unless you got $1,000 to waste, right? This should be just kiss goodbye money, because this thing may go down to 0. Don't know. So if you don't have $1,000 to play with, don't do this one here. But, you know, I do these kinds of things all the time. I'll tell you about one. That was my note that I put over here a second ago. We had a guy come to our class, just like you guys, about 6, 7 months ago, and he told me about a little company called Televideo. Can we get a price on this one, Will, if you will? Televideo, I really like this little company. And I started buying it at 25 cents a share, just like what we just showed you there. 25 cents and 28 cents a share. I started doing it last August. And every now and then I would spend, you know, if I had an extra 500 bucks here, an extra 1,000 there in my account, I'd buy some more televideo at 25 cents. I just kept loading up, loading up, loading up. And then all of a sudden, bam, I call up my stockbroker and I say, hey, what's televideo doing? Every day he's telling me 25 cents a share, you know. And I thought he was going to say the same thing. He says, it's a 1 7/16. I said, what? He said, yeah, it's up to $1.50 right now. Now it's $1.58. It's back down to 1 7/16. This thing's bounced. I got really great news, and it went up to 1 7/16. So I started selling it. Now, by the way, I got to tell you something. I spent about $14,000 plus on buying this stock over about a 2 or 3 month period of time. At $14,000, I think I ended up with 66,000 shares of this stock. And I sold all of it for 1 3/8 and 1 7/16, right in that range. After all my commissions, after all my purchase price, after everything was done, I made $76,000. Was my net profit for about 3 or 4 months on this little deal, right? And by the way, so I sold it all at the $1.50 range, you know, at 1 7/16, and it went back down to 75 cents, and I bought a bunch of it again at 75 cents. And I'm going to try out where it is right now. Do you know?
21/32 by 75 cents.
So I've lost a little bit right now. Y'all catch that? So I bought it again. By the way, I bought it at 75 cents, and it's been up, and I have my order in to sell it at $1.25. Is that a nice profit? Not a bad deal. But what did he just say? 21/32 by 3/4. So the bid in the ass there, right? So what's 3/4? 18, 20, 18 30 seconds?
24 30 seconds.
24 30 seconds. So it's like what? It's like 69 cents by 75 cents or something, 67 cents by 75 cents. So if I were to sell it right now, I would lose, you know, 7, 8 cents a share. But I'm just going to wait it out. My order is in to sell it at $1.25, right? And what's that? Santa Clara? Yeah. Televideo is the name of the company. TELV is a ticker symbol. And but I'm just showing you, that was a little bottom fishing thing. I didn't mean to interject that in the rolling stock section here. All right, where are we now on this? Okay, yeah, SMTS. This company is called Somonetics. Somonetics or Somonetics. This one I've been buying and rolling between about 1 3/4 and about 250. About like 1 5/8, 1 3/4, and 250. Right? So where is it right now? It's getting close to the buy range. So if it gets back down to $1.50, $1.60, I'm going to buy some more of it. Right? It's right now at $1. Well, what would you pay? You see, you look at that 1 3/4, you say, oh, hey, I can get this for $1.75 right now. But that's not the case, everyone. Is that the bid or the ask? That's the bid. So if you get it, where are you going to get it? At the ask, which is at 13/16, you know, 1 13/16. All right? Theragenics, we don't need to talk about this one because I was buying this one at 2.5, 3.5, 2.5, 3.5. Actually, it was this one was rolling between 3.5 and 4.5, 3.5 and 4.5, and I bought a bunch more of it when it rolled down the second time, or I did about 3 times, down to 3.5, and it went down to $2.50, and I said, it sat there at $2.50 for like 4 months. And when it finally got back up to 2.5 where I bought it, I sold it. Right? It just sat right there where I bought it, and I just sold it and just got out of it. Right? And then it went up to 4.5. I called a couple days later, it was at 5 1/4. Just ticked me off. I just sold it and it just kept going back up. All right. Yeah, I shouldn't have gotten, yeah, I got ungreedy there. I should have gotten greedy. There you go. I should have gotten greedy. The next one is called the Exploration Company. TXCO is a ticker symbol. This is another one that I really like. Highly profitable, or I think they are, but they could be. This is a company that does propane conversions on automobiles. It's like they do 300 police cars for the city of San Antonio. Right? They're getting contracts with states and municipalities and foreign countries. They're going in and, you know, they convert all the engines to propane conversion, all that. Very, very, you know, nice contracts that they get. So almost every couple of days, it's like they announce that they're getting another $18 million contract with Baton Rouge or something like that. You know, it's just wild stuff all the time. This one came out with such good news. I violated everything I teach on this company here. The roll, if you look, can we get a chart on this one? TXCO. This is the pretty amazing chart, everyone. If you look at it, the roll is between 2.5 and 3.5, 2.5 and 3.5, okay? Except for it popped up to $4 one time. It had such incredible news. I thought this company was going to fly up to $10 a share. So I went ahead and bought a bunch of it at 4 and rolled right back down to 2.5. So it's 2.5, 3.5, 2.5, 3.5, okay? Are we able to get this one? Yeah. Okay, where's it at right now? Yeah, this is down the buy range right now. Okay, you'll hardly ever see this one going below 2.5. If it goes down to 2.25, I get a bunch more of it. Okay, look at this chart, everyone, and you can see where it got up to $4 right there, right? But look at this back here. This is the 225 range, you know, and then here's well, there's 350 clear up there, so that's 325. Look at this, up and down, then it went way up. Now I should have sold right there, but I bought right there, because I mean I just got faxed me all these articles and all this great stuff and everything that was going to happen. And I really thought this was a $10 stock. I thought it was going to quit rolling and take off, right? So this is a good 2.5, 3.5. Probably, by the way, this is probably one of the most exciting ones that we'll cover. Okay, TCVY. The stock is 5.5, 6.5, 5.5, 6.5 roll, but it's right down around $5 a share, a little bit under $5 a share. Right? I'm not going to say very much politically about this because I don't want to offend anybody at home, but this little company is getting drug into the whitewater thing. Major shareholder of this company is Tyson's Food, right? A person that I won't mention here, her name is not, I'm not going to mention it, but she was on the board of directors here, and it's getting drug into the whitewater thing, right? So the stock has been floundering for last year, ever since that news came out. All right, it's pretty amazing that a sweet little yogurt company is going to get drug into that whitewater stuff, right? Okay, Candies. Candies, everyone, is a ladies' apparel store. They specialize in leathers goods. It's called Candies Incorporated, right? Ticker symbol is CAND. Okay, on this one. This one is a roll between about $1.50 and about $2.25, right in that range right there. Again, you have to, you know, buy at the bid and all that, you know, all that stuff. I mean, buy at the ask and then sell at the bid. All right, Oxus International. Here's another one. Here's another one. I'm really into pycnogenol. How many of you ever heard of pycnogenol? Right, it's an antioxidant, right? A super antioxidant, right? It's from the marine pine bark of southern France and all that. This antioxidant is like 20 times more powerful than vitamin C and all that. I mean, if you read the researches on pycnogenol and what it does for your body, it's amazing stuff. I got a little daughter. She's always sick. I started giving a little one little tablet of pycnogenol a day. She hasn't been sick in almost a year and a half. This stuff is unbelievable. I love this pycnogenol stuff. And if you want any more research on it, we have some people at our office that, you know, we have these little $20 kits and we'll send you some stuff. So if you want to get it, just say $20 pycnogenol kit. It's P-Y, I'll spell it for you. Okay, I'm going to come back to Oxus. Hang on. I'm not trying to market you anything here right now. It's P-Y-C-N-O-G-E-N-O-L. Pycnogenol. What's that? My daughter's growing a beard? No. No. Now, the reason I'm bringing this up, everyone, is that this oxidation thing, I mean, and they got reports for doctors. If you want to read the medical stuff on pycnogenol, the stuff is phenomenal. It's a really super antioxidant. It's good stuff. Now, Oxus International. Get the word ox there, O-X-I. What does it sound like, everyone? Oxidation, antioxidant, right? Here is a company that has laboratories that is doing all this antioxidant work. A couple months ago, I got a really strange letter from the president of the company saying, we don't know if we're going to be able to arrange financing. We don't know if we're going to be a viable company very much longer. By the way, the stock at that time was like $2. It dropped down to $1.50 when that letter came out. I sold everything I had at that time. Bad news, I thought. This company's not arranging their financing because they were trying to buy a laboratory in southern France. What does that sound like, everyone? The marine pine bark, southern France, pycnogenol, antioxidant, Oxus International. They're into antioxidants. That's what this company's all about. By the way, I think that antioxidants is kind of like the new marketing wave of the future for a lot of medical stuff, is it not? Antioxidants is a big thing right now. Here's a company that does stuff. Now, I wish I wouldn't have sold it at $2 right now because I got out of everything like at $1.75, right? Why? Because I got that letter from the president kind of asking for money in a way. And I didn't like it, so I got out of everything. I'm going to go check and see if I got out of everything because now look where it is right now. A month later, maybe they got their financing.
What would you buy back in that?
I don't know yet. I got to do my new research on this one because look what happened. You can see the roll here. This is an incredible roll. You know, clear down to the 150 range up to 250 and back, and then bam, right here is where it took the dip, and I sold. Where did I sell? I sold in May. I sold right here, right around $1.75, and it's cleared back up now to what? 3 1/8 by 3 3/8. Okay, and I don't know anything about LMTS. LMTS. I don't know anything about. I don't do that one. That maybe is that one that you do, Will? Are you just checking it out? Okay, so we'll check it out, and it'll be on Win. Now, by the way, let me. We're going to move on right now, but let me just mention to you, all of you sitting here. I asked this question yesterday about how many of you subscribe to Win. How many? Okay, that stands for Wealth Information Network. Now, let me tell you all the rest of you a little bit about it, and all of you watching at home. I'm going to kind of address my remarks to the people at home, because there's got to be a lot of you that are sitting in Duluth, Minnesota, and Tallahassee, Florida, saying, okay, I'm listening to all these things, How do I get an update? Now, we've toyed with a lot of ideas, by the way, that with this video package that's going to be mailed out to people about putting in update reports and all that. And then we determined that the best thing that we've ever, well, one of the best things we've ever done on a day-to-day basis is start our computer bulletin board service. So let me tell you about that and where it all came from. In April of last year, we started to do some of these stock market seminars. And everybody kept saying, Wade, how do we find out about all the things that you're doing? And I said, well, I don't know. I guess I could do up a newsletter, right? So I had a newsletter before, and there's a lot of work. Anybody ever had a newsletter before? Writing them and typesetting and mailing and all. And my wife, by the way, it's probably like get a newsletter or get a divorce. I got to take my pick because my wife probably won't let me do one again. It's just a lot of work. All the timeliness of it and all that, it's just a lot of work. So a lot of people said, why don't you get a BBS? And I got to tell you, when I am not into computers, I swear I thought BBS was some British intelligence thing. You know, I mean, seriously, I didn't. I said, what is a BBS? I said, what's a computer bulletin board service? I said, what is that? How do I have a bulletin board service? They said, well, get a big computer in your office, you know, that can handle a lot of lines coming in, and we can all log on and find out what you're doing. Every day we can find out what you're doing. So we shopped around. We got all the computer software program. We got everything ready to go, and we started up the Wealth Information Network. Now, there's real estate information, estate planning stuff, there's tax things on there, but probably 80–90% of the people that log on, and 89% of what they do on there is all about the stock market strategies. What am I doing every day in the stock market? So let me tell you what I do. Because I still don't enter things into the computer, I call up my stockbroker on the phone. I'm riding in the car, whatever, and I write everything down. I'm seriously driving, listening, and writing. I'm a dangerous driver. But listen. But when you're a cab driver, you learn how to do those kinds of things, right? You learn how to do several. You live in a taxi, so you learn how to live in a taxi. All right. So I'm doing all the stuff, and then my secretary types it up and puts it on Win about 45 minutes to an hour later. By the time she types it and puts it on Win. Now I was making the commitment, and I'm still making the commitment. By the way, all of you at home, to put entries on there like every 2 weeks, but I am doing about 2 and 3 a day. So I say, good morning, at 6:30, we're going to do this and this and this and this and this. I just bought this stock. I just did this. I just sold this option. I just did this. And then about 10:30 or 11, when I'm going to the office, I call my stockbroker again. I do some more deals, and I put them on Win. And I'll say, this is my second update for the day. Okay, you ready to go? Okay. We're going to show you how this works. But anyway, you can log on 24 hours a day, and 7 days a week. It's Mac compatible, IBM compatible. Let me make a recommendation. If you get Win, and if any of you subscribe to Win, that you download our RIP Term program. Okay, now we have RIP Term. It's a shareware program with what we have, and you as a user can get on and use RIP Term. Now, if you want to go to a computer store or whatever, you can buy this for like $29, $39, something like that. And you can buy, and it is a communications package. It will let you dial out. We have this, though, available for you as part of our system, so you can just download it to your computer. If you do so, you'll be on some really nice graphics, right? If you don't do so, guess what? You'll be on your DOS, right? And you'll be pushing one, enter, and all that. All right, so when you log on, you'll have this world icon in the background, and then it'll say the main system menu, right? Now, you can just, again, you got to choose your time to call because, you know, for telephone rates. You don't have to be on very long. You can just shop around, find what you want. For example, what if you only want to download everything that I said that day, up to that point in time? You can just go right to that. So let's do that. Let's go to Systems News. Now, I only do this 5 days a week, Monday through Friday. And it will say Monday. Let's click on Monday. Okay, and it'll be Monday, June 19th. Now, because I was in class yesterday, I didn't do anything. Did we put anything that we did on Win on here? Well, we should have done that. Okay, we should have had a bunch of stuff that we did here in class and stuff we were checking, but we've just been so busy with all these cameras going and everything that we haven't done that. All right, go to last Friday, though. Go to last Friday. Okay, so here's Friday. There's a Systems News. Anyway, so you find out what I said that day. Okay, now, let's go back to the main menu and say that you want to find out what I did with covered calls, what I did with rolling stock, what I did with whatever, okay? So then it goes to cover, so click on Wade's World, okay, which is all the stock strategies. There's bottom fishing, rolling stock, for your information, bonds, dividend capturing, options, and covered calls. So let's go ahead and click on covered calls. Now this says Thursday, June 27th. Wendy's, ticker symbol WEN, is currently at the time of this taping, currently at 18 3/8. Okay, I own a lot of it, options on it, see that, and I'm reporting what I'm doing. Right, and then you can scroll back, you know, even several weeks or several months if you want to, and just go back and get all the stuff. So you can track what I've done if you want to go back there. And again, now everyone, I have the right, by the way, to make recommendations. You know, in this kind, I can say I like this stock or whatever. I can say that, but I really don't make recommendations on here. I'm not a stockbroker. I'm not going to get anything out of what you do, right? You make your profits. You keep your profits. I get nothing out of what you do. I am selling an information service of what I do, right? And I have my First Amendment rights to tell you what I do. So that's what you're doing. If you want to log on here and find out what's going on in all kinds of companies and all that, you're not going to find it. All you're going to find on here is what I do every day. And by the way, every day I am probably doing stuff with between 5 and 15 stocks a day. Every day. So if you want to know what I'm buying, why I'm buying, and by the way, what I do on here is also I teach strategies, like a covered straddle or something like that. If I want to show that, and if I do a stock play like that Amdahl deal, I must have wrote 5 pages on Win about that Amdahl transaction. Buying the stock, selling the call, and selling the put on the same stock. And I explained exactly what I was doing, how I was doing a covered straddle on that, and that's what that is, by the way, is a covered straddle. I was doing them both. So anyway, that's what Win is all about. Okay, and I really, really, would encourage you to log on this thing. But let me tell you, I have really, everyone, become with this like a clearinghouse for information. Y'all understand how that works? Because you guys can email me stuff, fax me stuff, and you're sending me companies, just like what we've done here in class, right? You guys bring me companies, just fax me things, and then I do the research, I check them out, and then if I do the stock, I put it on there, right? And then all of a sudden, so I am kind of like a clearinghouse for information on stocks that you're finding, one part of the country, and you're able to take advantage of the same stock that she found that I just put on Win. See how that works? I've said this before. We can all make more money together than we ever can alone, right? Just by kind of sharing the information and getting it all out there. So anyway, I hope you subscribe to Win because it will be a fun thing for you. All right, let's get back to the seminar. We are now on page 38. We're going to do this one, then we'll take another quick break. On page 38. This one won't take too long. It is a strategy called rolling options. So let me tell you where I learned this one. Matter of fact, I learned this one from people that came to my seminars. I would sit in my seminars and talk about a rolling stock, and almost invariably I'd have somebody sitting off to the side and says, hey Wade, you're doing that rolling stock, we're doing rolling options on it. I said, what? We're doing rolling options. Now, quick point. When are options tradable? What's the first option ever written is at what price? $5. So if you're doing rolling stocks at $1 to $2, there's no options available, right? But if you do that Amex Gold at $5, if you do, well, not now, but TCBY was over $5, that has options on it. If you do stocks that have options on them, then there's another play, all right? Oh, by the way, when you're doing these cheap little stocks, like $1 to $2, can you do them on margin? What do you think, everyone? If what? If the broker allows it. Y'all catch that? If the broker allows it. So let me just re-explain this. When we're doing our covered call writing, we're doing the $8 stocks, the $12 and $15 stocks. Those are marginable, right? So we can put up half the money. When you spend $1,000 on, well, Cineplex Orion, by the way, is marginable, right? That's a New York Stock Exchange company. They'll allow that. But when you do these cheap little companies like Primetics and some of those, by the way, I don't know if that's Primetics or Primedex. I don't know how you say that. You get the name of a company, you go around the world putting the emphasis on the wrong syllable all the time, and I am constantly doing that. Anyway, but they're not going to allow that to be marginable, right? A cheap little 30-cent stock or 25 cents. Do you see the point? So when you buy those for cash, do you have to have cash in your account? You have to have all cash to buy those kinds of those stocks. So, and remember, buying options are not usually marginable. Can I make a quick point now? I built up my accounts quite substantially now, and I was moving a bunch of my money over from Charles Schwab over to Smith Barney to really get going with the money, have my stockbroker help me managing a little bit better. And he was amazed, by the way. He said, Wade, do you realize that Charles Schwab had put almost every stock you had, even your little 75-cent stocks, dollar stocks, all on margin? I said, I know, I thought I had a lot of margin capability there. He said, yeah, I mean, our margin department's going crazy with your account. They cannot believe that. See, when they accept your account, right, they have to accept all the debt, do they not? Remember that? So when somebody else takes, if you transfer money from one account to another, if there are stocks in there that are on margin, guess what? You have to go off margin, or the new broker has to accept them on margin, right? So he's got to be willing to accept the debt. And they didn't want to accept the debt on a lot of these cheap little companies that I had. So just for your information, as you get more money into your accounts, well, you guys know this. As you have more money, do a lot of things, do you get a lot of favors and a lot of special treatment? What do you think? Yeah, and you pay higher commission at the beginning when you're poor than you pay when you're rich. This is the way it works. Okay. Yeah, it's kind of backwards the way it should be. All right, now let's go back and talk about these rolling stocks. Option stocks start at 5. Usually marginable stocks start at 5. So most of those little rolling stocks at $3 and $4, guess what? No options and no margin. All right, but if you do find one between $5 and $7, right, then you can do some plays with it. Like, for example, ones in the past I've done has been Tyco Toys. I've done Walker Interactive. I've done a lot of companies that are between that $5 and $7 range that were marginable. All right, let's stick with Amex Gold for a second. I'll show you kind of a play on this one to prove the point of rolling stock. All right. So here's the example that you see there on page. You should be on page 38. The example. The stock is going from $6 to $8 or $7.50, let's say, and it goes back down to 5 3/4, and then it goes back up to 8, and then it goes back down to 6, and it goes back up to 8. Now, I was rolling this stock. I was buying it between 5 and I was rolling it between, say, 6 and about 7.25 and 7.50 several times. Now, one time, I'm going to put the play over here. One time, when the stock got down around $5 a share, right? What I did, and what you can do is this. I'm going to run the numbers on you now. What happens if you bought this stock and you bought 1,000 shares of it? How much would that cost? $5,000. So just keep that in mind. Now, yes, if you did it on margin, it'd be $2,500. But let's just stick the $5,000 there to prove a point. Now, if the stock goes up from $5 up to $6 and you sell it at $6, then you make well, you don't make, but you have $6,000 and you make $1,000 profit. We all together on that? Well, let's do another play. The other play would be this. Call up your stockbroker. So this is a stock play. The other play would be call up your stockbroker and say, what is the 750 call going for in, let's say, a month or two? Give yourself at least a month, but maybe 2 or 3 months out, right? And by the way, when this happened, the call was 25 cents, right? Because there's really no believers that it's going to go up to 750. But by the way, what would happen if the stock, even if it doesn't go to 750, right? What would happen if the stock goes from $5 to $6? What's going to happen to this 25 cents? Again, if there's plenty of time and all that, right? So what would that cost, everyone? 25 cents is how much? $25 because there's 100 shares. Let's do 20 contracts. $25 times 20 would be how much? $500. All right? So you have $500 cash out of your pocket to buy the option, right? Not the stock. So you have $500. By the way, here you bought 1,000 shares. By the way, how many shares are you controlling over here with 20 contracts? 2,000 shares. Okay, now let's do this. The stock is at $5. I want you to see this little, I'm going to put it in a different color of ink. A little chart right now. The stock is at $5. I'll put that over here. And the option is at 25 cents. The stock goes to $5.25, and the option goes to, 25 cents. The stock goes to $5.25, and the option goes to, say, 37.5 cents. The stock goes to $5.50, and the option goes to 50 cents. The stock goes to, let's say, $5.75, $6 range, right? And the option goes to let's say, 75 cents. You say, that's enough, that's it, I'm out of here, right? So you sell the option at 75 cents. All right, remember, we're not going to do the stock. We don't even care about the stock, right? What are we doing here, everyone? Making money on the option. So we sell the option at 75 cents. How much money? Y'all see that? I get one person answering. I don't know where the rest of you are when only one person answers. If you sell it at 75 cents, you have 20, that's $75, right? Times how much? Times 20 is $1,500. What's your profit? So you have $500 invested, you get back $1,500, so your profit is how much? $1,000. So you have $1,000 profit. What's the big deal? Why did I even show you this? Because you could have made $1,000 the other way. But how much money do you have invested? Yes, see that? See, here you have the full $5,000, or at least $2,500, right, on margin, right? You have $5,000 and you made $1,000 profit. Nice deal. Hey, that's go home and brag to mama time, right? You make $1,000 profit. What about the other way? Now, what's the risk, by the way, in doing an option? Because if the stock flounders around $5 or so and it doesn't go up at all, did you lose your $500? So whether the stock goes up or down, if you own the stock, you still own the stock, right? But if the stock goes down and you own the option, you lose your money, right? You lose your $500. And if you can't handle that risk, you shouldn't be doing this kind of stuff. So you lose your $500. But if the stock even floats up just a little bit, look what happens to the value of the option. So I do this one a lot. I like these, by the way. I just get in buy these little dinky options on rolling stock because you know what? You know where the limits are. You know where the bottoms are, you know where the highs are, and you know that you can get comfortable and get familiar with them and know where the ranges are. you know it's probably not going to go to $7.50 or $8, right? It hasn't done so for the last year or so, right? So is your play to get it up to $7.50 or just hopefully it goes back up to $6? What do you think? By the way, this is exactly what happened this week. About 2 weeks ago, 3 weeks ago, this Amex Gold was down around $5 a share, and the options were 12.5 cents. And I just checked, when was it? Friday or Thursday? And they're already up to almost 50 cents. Right. Okay, now these options I just bought when I just told you was August. Okay, August. By the way, I want to mention something to you about that, about you saying, what month did I do this? I guess I should have done my homework on this before I came in and done this on a TV camera, but it doesn't matter, because I'm going to tell you what I'm going to show you right now. It doesn't matter, because I don't care about what I'm going to show you. People talk about what cycle is a stock on. Now, I'm going to make up this, because I don't really care, because it doesn't matter to me, but I'm going to make up something here. See, stocks, everyone, are on one of two cycles. So right now, if you want to go out, do you remember today, you've heard it already, the stockbroker, we say, well, what is a December, what is a November option? And they say, well, they don't have any, it's October and December and then January. Have you all heard that before? Why isn't there a November? Because it's not on the January cycle. Now, I'm going to make this up. So here's the January cycle. So the January cycle, if you're a stock company, if a company is on the January cycle, it will have an option like January. It won't have one in February. It will have like March. It'll have April. It won't have May, but have June. It won't have July. It will have August, September, have October, and December. Okay, so it only has options written those months, right? And then if it's on the February cycle, there's two cycles. The February cycle is that it won't have January, but it'll have February. It'll have March. Will not have April, but it'll have May, June. I'm sorry, May, no June, but July, August, September, and it'll have September. It won't have October. It'll have November and December. All right, you see that? Now, I'll tell you why I don't care about this, because it doesn't matter to me. Have most of my plays the last couple of days been the next month out? What do you think, everyone? Okay, now listen carefully. Even though, but even though there are these different cycles, and this is probably totally incorrect. I don't even care, all right? So if you want to come along where this cab driver is, you got to learn what to care about and what not to care about. The options marketplace is not crazy. Even though, watch this, even though we're right now in July, even though, in June I mean, there is no July written, right? Clear back here. When it gets to be May and June, there will be Julys written. There are stocks written every month, but sometimes they're only 1 month out. Y'all catch that? So right now, there is no, on some of these cycles, there's no Novembers, right, on one cycle. But boy, when you get to October, that stock will have November options. Y'all catch that? So the 1 month in advance, is the option market making money on the bid and the ask? What do you think, everyone? If there's a play on the stock, they're going to write it for the next month. Y'all see that? So I really don't care about the cycles. Y'all see why? Now, somebody asked about triple witching hour. Okay? We have here stock options. There are also, this is one play. There are also futures contracts, and there's also index options. All right? There are 3 different kinds of options, and I'm not even talking, there's 4 really. There's the foreign currency options too. They all have their own cycles, right? They all have their own cycles, and so you'll see one that has this month and 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 this month, and this one has this month and this month and this month and this month. All right. The witching hour is the Friday of expiration month. Okay, so that's that Friday. That's the witching hour. All right. Now, what happens if on that same day, not only do stock options all expire, but the index options expire? So what's that called, everyone? Double witching. And once or twice a year, depending on if all 3 line up, you actually, not 3 times, usually twice a year, there's what is called triple witching hour. Right? And triple witching hour is when all the options expire in all 3 marketplaces. That's the day when stockbrokers jump out the windows in Wall Street. No, this is no joke. This day when they kill themselves, they commit suicide. This is the day when, by the way, on some of these futures contracts, can they lose a lot of money? This is where they invest $25,000, they lose $2.5 million, you know, in a week. And that's when they jump out the windows, right, on some of these witching hour days. This is a day that you probably don't want to call your stockbrokers. No kidding. When I come up on that third, you know, whenever it happens, and Dale tells me or Randy tells me during the week that there's a triple witching hour that Friday, take the day off. Don't call them, because they are so busy. Is that right? Everything's expiring. Everybody's trying to get in and get out. Everybody's trying to do stuff on the last day before the expiration, right? So you probably don't want to be around your stockbroker that day. Okay, it's a horrible day. All right, we got to finish this up. Okay, the whole play here on rolling options, again, on page 38, is that we're playing the option, not the stock. Y'all catch that? We don't care about the stock. We just want the option to go up a little bit and buy the option and sell the option. By the way, if the stock rolls back down, what can we do again? Buy the option again for another month or two out and then sell the option again. That's just another play. And why are we doing it this way? Why not just buy the stock? Why are we doing options? Leverage, right? Less money in, bigger risk, lesser money in, to the same play. All right, check margin capabilities. Why do you want to do that? Because if you're back to our example, you cannot do your options on leverage, but can you do your stock on leverage? So you should see if it's margin capable on certain stocks. All right, now obviously here, does the same rule apply to rolling stock that applies now to rolling options? Should you know where you want out? What do you think? Or should you just buy that 25-cent option and just wait for it to go and see where it goes? Or should you know exactly where you want to get out? In this case here, where did I get out? I tripled my money. By the way, that's a pretty standard thing that Wade Cook does. He triples his money and he's out. Right? Get in, get out, triple your money. Get in, get out, just get in and get out. Okay? So the stock goes up a little bit more. So you could have made a little bit more profits. Are you happy with tripling your money every couple of days? There you go. Okay, and I just want to triple my money and then I'm out. All right. All right, let's go ahead and take a break. When we come back, we're going to be talking about some other money multipliers.